and waving the arrival of this really landmark moment for India's private space sector as well. But you do have the rocket's first stage. That is also, like I mentioned, India's longest monolithic carbon composite rocket stage as well. It's built as a single integrated structure, really. So that's rather than a multiple assembled section, you do have one particular integrated structure as well. It showcases advances in the indigenous aerospace engineering and composite manufacturing. So for some of the science geeks as well, this is quite important in terms of it being the first fully 3D printed engine on an Indian orbital rocket as well. So it's powered by a 100% 3D printed liquid engine as well. It's the first fully 3D printed engine to be used on an Indian orbital launch vehicle. And it's quite complex in terms of the structure there. It's going to be helping position the payloads accurately after the main stages complete their task as well. And that's why it's also quite important to, talk about some of those advancements as well. A lot of firsts when it comes to this one. The planned pause is just coming in before the launch right now, and everyone's just looking at their watches and of course their screens. When you talk about some of those live visuals showing on your screens as well, it's the advanced low shock separation technology as well. When you talk about just the technical specifications as well coming in, so it uses an ultra low shock pneumatic separation system that really detaches the rocket stages and payload fairings. So this technology, what that basically does is it reduces some of those vibrations and mechanical shocks as well. So helps really protect the delicate satellites during deployment. So a lot of thought, a lot of planning has gone behind building Vikram 1 as well. And, this is why it's very important as well. And we'll keep getting you all of those details after that planned pause really goes away in terms of Vikram 1's launch as well. But let's also take a look at some more updates also coming in terms of the space debris removal technology demonstration as well. A lot of things that are key to watch out for when it comes to this launch. Some other important technological specifications, of course, you do have all of those children really waiting by very patiently for that planned pause before the launch. And it's a lot of, complexities that really need to be working, lots of moving spokes to this wheel as well. And that's why it's important to have that planned hold as well before the launch of Vikram 1 as well. And of course, it's very important in terms of India's landmark space moment. All right, then that's the entire update coming in as far as Vikram 1 launch is concerned. It's a planned pause before the launch. But let's also talk about Axis Bank. And we've mentioned before this that Axis Bank, as well as some of the other banks, are going to be coming out with their earnings. And right now, you have Axis Bank numbers flashing on your screens at the bottom of your screens as well. So you do have all of those numbers in terms of the net profit coming in, with about a 0.6% uptake also coming in. We'll get in Piyush as well in just a bit in terms of the commentary also coming in from the sort of earnings fine print that you have also. But when you talk about some of the other numbers as well, you do have the gross NPAs that are at 1.28% versus 1.23% on a quarter-on-quarter basis as well. And that's something that you're looking at. The net profit figure, like I mentioned, about 0.6% higher at somewhere close to 7,100 crores as well. Let's talk about some of the other numbers as well. Net NPA, like I mentioned, about 0.4% is what you're looking at, 0.39% versus 0.37%. And let's also get in Piyush, like I mentioned, he's standing by with the earnings fine print when it comes to Axis Bank.
That's right. Axis Bank has come out with above expectation sort of a result for Q1. However, the fine print, when we see both in terms of margin, the bank's net interest margin is actually down 16 basis point quarter on quarter to 3.46% in Q1. Further, if we see the Q1 profit was mostly driven by lower provisions. The bank's provisions have actually gone down quite sharply. It stood at around 2,223 crore versus 3,520 3,122 crore last quarter and versus 3,948 crore in Q1 FY26. So there's a sharp fall in provision. This quarter only 2,223 versus almost 4,000 crore of provisions which were made the last year. So NIM is down. PAT is basically led by the lower provision. The net interest income, like you rightly mentioned, has risen, is at around 14,646 crore, which is again below the estimate of 15,147 crore according to Bloomberg estimates. So a mixed sort of a result. NIM is down. However, the bank has been able to bump up its profit essentially because of lower provisions.
Absolutely, and thank you so much, Piyush, for getting us all of those insights as well. You know, it's Axis Bank that's quite important right now. And when you talk about some of the other commentary coming in from some of the other banks as well, when it comes to NIMs, right now, of course, a little bit sort of weakness that you're seeing coming in when it comes to Axis Bank. But when you come to HDFC Bank in terms of what we're penciling in, the update seems to be that the NIMs are going to be broadly remaining stable around that 3.5% mark. When you talk about ICICI Bank as well, the NIMs are going to be remaining stable, and that's also something that we're watching out for. But let's also talk about Axis Bank in greater detail in terms of some of the key themes that we have so far across banks as well. And you do have the loan growth that continues to remain healthy across banks as well. So that's really the update that you have coming in thus far for some of the banks that have reported their numbers, something like an RBL Bank or Federal Bank as well. You do have the deposit growth that's really improving, and the NIIs are largely resilient despite that rate environment as well. And that's why it's quite significant, to say the least. When you talk about RBL Bank, you do have the PAT really rising on the back of the sharp NII uptick also coming in. So that's really supporting some of the numbers as well. And when you talk about Axis Bank particularly, you do have the fine print really reflecting that the profit is the one that is up about 0.6%, and it's also above estimates, just as Piyush mentioned as well. In just a moment, we'll get you some more insights. But before we do that, let's also take a closer look at some of the provisions numbers as well. And like Piyush mentioned, it's somewhere close to 2,200 odd crore compared with that 3,948 crore figure on a year-on-year basis as well. And when you talk about the profit, that's really the one that is standing out right now. The NIIs are the ones that are a little bit, higher as well on both a quarterly as well as a yearly basis. But that said and done, the story, of course, this morning has to be Vikram One launch as well. And that's something that we're really keeping an eye on. Let's cut across some of those visuals as well from Ground Zero in Sriharikota in Andhra Pradesh.
To the payload 1205
So the
Roger.
The payloads usually carry very sensitive
Noted.
electronics and instruments. So if you have
Control
a shock
calling
event
timing.
come about, it may
Timing,
damage
please
some
go
of the
ahead.
sensitive instruments.
Timing, you can
So that's
set
why
the
we
revised
specifically
T02,
made it a point to develop
12:05,
this
30 hours
pneumatic
IST.
ultra low shock separation mechanism.
Like, for the knowledge of our viewers, I would also like to reiterate, most
You can
typical
set and
rockets,
hold
they
the
use
count
pyro
on
cords, which use
Timing,
explosive
Roger.
charge to shear out the bolts and separate or jettison the entire stage, which could be catastrophic for some sensitive payloads. That is
Yeah.
very costly and could be like, you might
Timing,
lose
calling
some data
control.
from the satellite and
Yeah.
affect its workability.
Control here, go ahead.
Definitely.
Still external hold mode is coming.
Right.
Noted.
Now, even after the payload fairing has separated,
regulated to launch
the job
control.
isn't done yet, right? The climb is
Please release
still
external
going
hold.
on. Stage 3 steps in, and it generates quite a
launch
large
control
amount
two
of
controls,
thrust
external hold
to
release.
essentially power the vehicle
Roger.
into orbit. It keeps pushing it to near orbital velocities.
Control.
And then
Request
comes
MCC
something
to
different,
release the
like we
hold.
talked about earlier. We have the orbital adjustment module that kicks in. And this is the stage that I got to work on very closely. Like I mentioned earlier, it was a team of very ingenious, multidisciplinary members. We had teams from systems, propulsion,
Timing, you can
dynamics,
set the revised T02,
quality,
12:05,
safety,
30 hours
reliability,
Timing
CFD, design. I mean, you cannot count these fields on the fingers of your hand, and they all had to work in unison
Control to
build,
all ground stations.
build this stage.
All ground stations to
And
know.
then once
Revised
it starts
T0
working,
is
it
at
will precisely
12:05,
place
30 hours
all
IST.
of these satellites into its intended orbit. And you might feel like all of this is happening. There's so many things happening, right? But it's just 16 minutes. That's all it takes.
it's so
T-minus 20
fast,
minutes.
but it seems really long. Like it took us like 1 hour from the entire bus stand to reach Sriharikota. But as Suyash pointed out, so it's such a we can say the entire rocket engineering, the complexity. Looking at the complexity of it, it's like an entire opera house. You have to be like a soprano. You have to be so perfect. Every system, every individual, and every component should be in tune to engage all the systems at the right moment so that we can have even a small ignition. And now we have Avikram 1, which has close to 1,000 subsystems, and almost 2/3 of it will be utilized just even at liftoff. That's really fascinating.
So we've gotten confirmation, and you might see it on your screen shortly as well. The countdown has restarted. We are resetting to T-minus 20 minutes, and we are at T-minus 19 minutes for the information of all our viewers.
Other ground stations about the new T0. Please
To
confirm on
control
that.
timing in external
Cairo
hold mode.
CNC copied, new PGM files shared.
Roger.
Timing to control timing in external hold mode.
Roger.
Cairo LCC to all, S2 and S3 HMS is event number 97 completed.
Roger. Control to LCC, MCC and RSO. Please note timing confirmed, external hold mode.
Cairo LCC to all station. New T0 is 12:05:30 seconds.
All right, we're hearing from the mission control that the new T0 time or the liftoff time for
T-minus 18
mission
minutes.
Agman is reset to 12:05 p.m. So stay tuned. We'll be with you, and we'll give you some more space trivia. We have a lot of those, and we'll also take you through the journey of the rocket as well. You know, many of the times, one of the questions that comes is why space? You know, it's so hard. Getting to space is hard enough. Getting to space on the first try is even
All
harder.
stations to note.
So if
Mission
it's so
director
hard,
authorized the launch
why do
of
it at all?
Vikram 1 mission Agman.
What does it?
All right, then, there you go. So it's almost T-minus 20 as well, and we'll keep getting you all of those important details. But speaking of important, let's also talk about Axis Bank as well. That's right in focus as well. You do have Aditya Shah, founder, Hercules Advisors, joining us right now on the show. Thank you so much, Mr. Shah, for taking time out and joining us. First things first, just wanted to try and understand what you think about the first cut here in terms of the numbers. What's your first reaction coming in?
A bit of disappointing numbers. Loan growth at about 18%, deposit growth also at about 18%. But the slippages have risen. Slippages credit cost has risen if you compare it sequentially. And it is in contrast to all other banks who have reported a decline in credit costs. So we need to understand from the management why the credit costs have increased quarter on quarter and year on year as well. Last year, this time, actually had a special one-time provision that elevated the credit cost. So credit costs is not something that I'm happy with. Other than that, numbers seem to be okay.
Absolutely, and you know, when you talk about the net profit figure as well, just wanted to get your views on that as well. You've seen a little bit of an uptick coming in as far as the net profit is concerned. What do you think about that? Because that seems to be above the estimates as well.
As I said, so the credit cost, so if you look at other banks, as the provisions were down, it aided the net profit, and companies like Federal Bank, companies like RBL Bank have reported good set of profitability numbers. That's not so with Axis. That provision has taken out whatever profitability increase could have happened. From my perspective, not so happy on that.
No, absolutely, and that's quite important as well. Just also very quickly wanted to get your word in terms of the NII change as well. And you know, the trend that we've been seeing in terms of some of the banks that have reported the numbers earlier as well, RBL Bank as well as Federal Bank, you do have that NII figure that's been quite important as well. Going forward, what are you expecting when it comes to some of the other banks as well, and how are you putting that into perspective with what Axis Bank has reported?
So if you look at NIM has declined for Axis from about 3.6% to about 3.4%. You need to understand from the management as to what are the levers, and that consequently had its effect on the NIM. So from my perspective, if NIMs continue to deteriorate for banks, then NII will obviously get hit. From my perspective, the NIM hit and the asset quality, those are the two important questions that one needs to ask the management as the management comes to a disturbed.
Absolutely, and going forward, just wanted to also try and get a sense of what you think about the other numbers that are going to be reported. It's actually the banking behemoths that are going to be in focus. So you do have HDFC Bank as well as ICICI Bank. What are your views in terms of what's being penciled in there as well?
Yeah, so HDFC Bank and ICICI Bank, I expect them to report stable set of numbers. NIM expansion for HDFC Bank will be something that will be watched out for. ICICI Bank, again, stable set of numbers, nothing to complain about as such is what I expect. Again, Yes Bank and Kotak Bank, for Kotak Bank, stable set of numbers with who is going to lead the bank going forward, given that Ashok Vaswani is supposed to end his tenure in December 2026. So those are the important things to watch out for in the results today.
No, absolutely, and I just also wanted to get a sense of put the spotlight right back on Axis Bank and try and understand what you think about the slippages in terms of the key drags there as well.
So a lot of Axis Bank's book is also on the corporate side of it. You need to understand if this slippage was coming from the corporate side of the book or the retail side of the book. Haven't been able to read the presentation, so we'll need to see that. But highly likely that corporate slippages would have increased for us.
No, absolutely. And just very quickly, just wanted to try and get a sense of what you think about the outlook coming in terms of the loan growth as well for some of the other banks that are going to be reporting their numbers as well. Anything else that you're watching out for on that front in terms of loan growth or any other parameters? We've talked about NIMs, of course, but other than that.
Yeah, so systemic loan growth is at about 15 to 20%. Axis generally does not go too fast, but they also reported 18 to 19% loan growth. So I expect most banks to report loan growth anywhere close to 15 to 20%. In the last fortnight, the systemic loan growth has gone up to 18%. So from my perspective, 15 to 20% is what I am looking for all banks.
No, absolutely. And we also have Piyush joining in the conversation right now.
Yeah, Aditya, I just wanted to understand, the provisions essentially seem to have driven the bank's Q1 net profit up. In terms of lower provisions that the bank has made, how do you see, especially because, banks are also supposed to meet with the ECL guidelines. Some banks are also making provision with regard to West Asia conflict. How do you see, lower provision, this strategy that the bank has chosen in Q1?
So if you look at Q1 of last year, there was a one-time provision that Axis Bank took. With respect to that, the provisions are lower. If you look at the credit cost, the management has published the credit cost. And if you look at the credit cost, that credit cost has increased to 0.92% from 0.75% last quarter and 1.02% the quarter before that. So from my perspective, slippages or credit cost has not abated for the bank. Of course, the ECL norm will start to kick in, so the bank has to make provision for that as well. And I don't think most banks are not creating provisions for the West Asia crisis. I think portfolio has been stable for most of these banks. So from my perspective, not happy on the credit cost. We need to understand more as to why Axis Bank is creating lower provisions. The management has to give a guidance to this.
Aditya, we have also seen, a couple of lenders who had come out with the results yesterday reported a sharp, around 150 million odd mobilization under FCNRB deposits scheme that RBL Bank alone did. In terms of Axis, what is the amount do you think the bank would have garnered? Also the leverage that they could provide on this particular scheme? Is FCNRB, do you feel that because the presentation is, has just come out, so the bank's management is also yet to address the media later today, they'll do that. But under the FCNRB scheme, do you think the bank must have mobilized around 200-300 million odd deposits?
Of course. So if you look at the deposit growth, it is particularly strong for Axis. The deposit growth is at about 18%, which is really very strong. I'm sure due to the FCNR scheme that RBI had come up, even Axis would have garnered good amount of deposits per se. So from my perspective, I think all banks would garner good amount of deposits, given the FCNR scheme that RBI had come in with.
Right. And just one last thing, the top banks are reporting the results today. There is some expectation on HDFC as well with regard to CEO reappointment. In case that does not come through this meeting, how will the markets look at it in terms of succession planning? Because Sashidar's, Mr. Jagdishan's term ends in October this year.
I think the CFO is in place. I think the bank will go back to RBI to seek a reappointment for Sachidhar Jagdishan. That is the base case scenario that the market is working with right now. Any other case will only lead to a further delay of any return on the stock per se. I don't think that the market is looking at anything other than the reappointment of Mr. Sachidhar Jagdishan.
No, absolutely. And thank you so much, Aditya, for taking out time and joining us right now, not just when it comes to Axis Bank, but also HDFC Bank and ICICI Bank that are also set to announce their Q1 numbers. It's T-8 right now. We're going to be looking at the Vikram 1 launch shortly, but it's time for a very quick break. More news and updates on the other side.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
gyro compassing
T-minus
details
5
within
minutes.
it.
And now we have confirmation that mission computer mode has been successfully changed to flight mode, and we are really jubilant and everybody is really happy that this stage has been successfully transitioned, and now we'll move towards the next check, that is HMSA disarming.
As we enter the final few minutes of countdown, another key safety milestone is underway. The head mount safe arm mechanism will be activated in a while, and till now it was ensured that the ignition chain has remained safely isolated.
That's right, Vaidehi. For the viewers who are very curious for this, the head mount safe arm mechanism, which we refer to as HMSA,
T-minus 4 minutes.
is a safety device which is well mounted at the head of our solid rocket motors. And the whole job of this device is to safely isolate the pyrotechnics from the rest of the solid grain. And the reason why we do that is for safety, to prevent any accidental ignition from, let's say, lightning strikes. We do have a cloudy day today, and of course, we have lightning suppression systems. We have 4 lightning towers on the first launch pad. But there can also be some form of electrical runaway. There can also be static discharge. So to safeguard all these devices from electrical discharges, we have a mechanical separation between the pyro devices and the solid rocket motor.
Right, so yes. So till now, the ignition system, it was in a protective, non-firing state, but now it's going to move on to a state wherein once the mission computer gives the ignite command, it can initiate a pyrotechnic chain of events.
That's right. And we're at T-minus 3 minutes, and we have confirmation that the stage 1 head mount safe arm mechanism, or the stage 1 HMSA, has been successfully armed.
This basically means that our motor is now ready to ignite.
That's really great to hear. Along with this HMSA safety mechanism, we have one more layer of safety, which we call the FTS or the CDS, Command District System, or the Flight Termination System. This is utilized when if the vehicle during its flight mode tries to or like deviates from its intended flight trajectory, then the range safety officer can take a call to destruct the vehicle to safeguard the resources around it.
T-minus 2 minutes.
That's right. As is with the case with any launch vehicle, we always prioritize safety, and with that in mind, we have all of these systems set up on the vehicle.
All right, in less than 2 minutes from now, we expect the liftoff of the rocket that you see on your screen, the Vikram 1 rocket, Skyroute's date with destiny. It's a private Indian unicorn, the first in the space sector. In just about 2 minutes from now is when it's all going to happen. The countdown now stands at T-minus 1, 23, 1, 22, 120. Let's just stay put with these pictures, and let's hope that this is a resounding success. A new part of our economy, the private space sector, led by young engineers and entrepreneurs.
Nearly at T-minus 1 minute.
All stations.
And
stand by for the timer.
We will leave you with the views of Vikram 1 and join you shortly at liftoff.
Minus 55 seconds. Minus 50 seconds. Minus 45 seconds. Minus 40 seconds. Minus 35 seconds. Minus 30 seconds.
Real-time programs activated.
Minus 25 seconds. Minus 20 seconds.
Minus 20 seconds is the call out now.
Minus 15 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
And we have liftoff of Vikram 1, India's first private orbital launch vehicle. And we have great views coming from the tracking cameras. And isn't this quite something?
विक्रम 1 ने अपनी उड़ान भरी, प्रथम चरण का प्रज्वलन प्रारंभ हो चुका है। विक्रम 1 ने प्रक्षेपण पथ को लांघकर आकाश को भेदने का निर्णय ले लिया है, एक ब्रह्मास्त्र की तरह।
That's very true, Suyash and Akhil. I am awestruck at the sheer power that stage 1 is producing. With this, we have two of our major prime mission objectives completed, which was successful ignition and safe tower clearance.
That's right, and we're coming up on max Q now, which is the period of maximum aerodynamic pressure, where the vehicle faces its largest aerodynamic loads as it flies through this zone at Mach 1.5 at an altitude of nearly 9 kilometers.
विक्रम 1 ने सफलतापूर्वक मैक्स क्षेत्र पार कर लिया है और दल काफी उत्साहित है इस समय, और विक्रम 1 प्रथम चरण के आगे बढ़ रहा है और हमें श्रीहरिकोटा व पोर्ट ब्लेयर पृथ्वी स्टेशन से मजबूत दूर संकेत मिल रहे हैं, जो बहुत ही अच्छी खबर है।
That's right. We are at a downrange distance of 22 kilometers with an altitude of 34 kilometers. And on your screens right now are excellent onboard camera views from the vehicle.
And we can also see quite nominal chamber pressure values on the MCC screen.
The vehicle is currently at an altitude of 50 kilometers.
और यहाँ पे प्रथम चरण का प्रतिकरण हो चुका है और द्वितीय चरण का प्रज्वलन भी प्रारंभ हो चुका है।
This is quite a major achievement for the nation, with the vehicle successfully separating stage 1 and the ignition of stage 2 as well.
द्वितीय चरण अपना सफलतापूर्वक कार्य पूरा कर रहा है और प्रथम चरण का दहन अथवा प्रतिकरण समाप्त हो चुका है।
The vehicle is at an altitude of 89 kilometers, traveling at 2.6 kilometers per second. Of course, our target velocity for today is 7.6.
S2 performance normal.
We've just heard call out that the S2 performance or the stage 2 performance is nominal.
ये एक ऐतिहासिक क्षण है पूरे भारत और निजी अंतरिक्ष यात्रा का।
This vehicle has crossed 100 kilometers of altitude, which is the notion of edge of space, and we have reached space, guys.
Congratulations, Vikram 1 is in space.
हमारा यान अंतरिक्ष तक पहुंच चुका है।
And we've had callouts of separation of the payload fairing. We have successful payload fairing separation.
It's nearly at an altitude of 120 kilometers, and the protective fairing is no longer required and has been cleanly separated from the launch vehicle.
और यहाँ पे द्वितीय चरण का भी प्रतिकरण संपन्न हो चुका है और तृतीय चरण का प्रज्वलन भी प्रारंभ हो चुका है।
That's right, Akhil. We've had successful ignition of stage 3. The vehicle is currently at 157 kilometers above the Earth's surface. It is 355 kilometers downrange, traveling at nearly 4 kilometers per second. Now, the telemetry will switch over from Shar to Port Blair and further to Bogor.
अब यान अपनी अंतरिक्ष यात्रा पर निकल चुका है। तृतीय चरण का प्रज्वलन चालू है और उस की प्रतिक्रिया नियमित रूप से चल रही है।
And as you can see on your screens, we have near exact following of the intended trajectory. The two lines on your screen essentially indicate the current performance of the vehicle, and it closely matches with prediction. This is on your screen on board from stage 3. What you see is the rocket plume and the nozzle and Earth, our home.
What a beautiful view. क्या सुंदर दृश्य है हमारी पृथ्वी का।
S3 performance normal.
और तृतीय चरण का परफॉर्मेंस अब नॉर्मल है, या कि सामान्य रूप से तृतीय चरण का संचालन प्रारंभ हो चुका है और चल रहा है।
That's right. We've had call out that the stage 3 performance is nominal.
plus 5 minutes.
So stage 3 has a propellant loading of 2.5 tons, and we've had burnout of the stage 3 motor as planned at T plus 5 minutes. Yes, we've gotten confirmation that S3 has burnt out, and now we're entering a planned coast period, something that lasts for 140 seconds, in which it's called as combined
coasting is normal.
Right, so we've got call out that the combined coast is nominal. This will last for roughly 140 seconds, where stage 3 is not producing thrust, but it's connected to the vehicle and it's going to coast as a single body. All of this is done to manage the altitude of the vehicle and also control where the stage will re-enter the Earth's atmosphere before splashing in international waters in a safe and planned manner. And jubilant views from the launch control center, where the teams are extremely elated and excited.
और मिशन नियंत्रण केंद्र और लॉन्च नियंत्रण केंद्र से आपको दृश्य दिखाई दे रहे हैं. सभी यान परीक्षण दल अत्यंत ही प्रसन्न हैं और यहाँ पर जो प्रसंग है वो एक उत्सव का प्रसंग बन चुका है. एक ऐतिहासिक क्षण भारत के निजी अंतरिक्ष उड़ान का. विक्रम-1 यान अब अंतरिक्ष में स्थापित हो चुका है. तृतीय चरण अब अपने कोस्ट फेज पे है और ये कोस्ट फेज अभी आप कैमरा व्यूज देख सकते हैं अपने प्रक्षेपण पर्दों या मोबाइल स्क्रीन्स पर, जहां पे आपको धरती का एक सुंदर दृश्य दिखाई दे रहा है.
As we can see on our screens right now, it's really amazing to see that Vikram-1 as of now is going along its intended trajectory exactly as expected. Our plots are really overlapping. The predicted velocities and the current flight velocities are exactly matching. And aren't you guys speechless right now?
I mean, yeah, मेरे पास शब्द ही नहीं है. मतलब ये मैं निशब्द हो चुका हूँ.
That's right. We are approaching another point wherein S3 will separate.
S3 is separated.
और तृतीय चरण का प्रतिकरण भी हो चुका है.
And you see wonderful views of S3 separating. And now we have combined coasting has ended, and stage 4 will now coast on its own for the next 130 seconds. So stage 4 will now fly on its own, essentially, and
the control thrusters on the OM will be continuously turning on and off to maintain the attitude of the stage, making sure that it is pointing the right way. This also ensures that the antennas can maintain connection with the ground station and the satellite can be pointing in the right direction.
That's right. So one unique thing that has been done during separation is we've essentially fired all 4 of our Raman Mini thrusters to sort of push stage 4 away from stage 3. And that just sort of guarantees that there is some minimum separation between the two.
अब आने वाला जो चरण है वो द्रव्य प्रणोदन पर आधारित होगा, जिसको हम कक्षा स्थापन या समायोजन खंड ऑर्बिट एडजस्टमेंट मॉड्यूल के नाम से भी जानते हैं, जिसमें द्रव्य प्रणोदन की अवस्थाओं से संचालन होगा जो मोनोमिथाइल हाइड्रोजीन और डाइनाइट्रोजन टेट्राऑक्साइड पे आधारित है. उसके साथ यान के घूर्णी नियंत्रण के लिए, जिसे कंट्रोल थ्रस्टर्स कहते हैं हम लोग, उन रामन मिनी 50 न्यूटन, वो भी मोनोमिथाइल हाइड्रोजीन और डाइनाइट्रोजन टेट्राऑक्साइड पर ही आधारित है. उसके अंतर्गत हमारे पास छोटे कोल्ड गैस थ्रस्टर्स जो कि नाइट्रोजन गैस पर आधारित हैं, वो भी कक्षा समायोजन खंड पे स्थित हैं.
S4 ignited.
And we've heard call out that S4 or stage 4 has ignited successfully.
और चतुर्थ और अंतिम चरण का भी प्रज्वलन हो चुका है.
The liquid engine has come alive over 400 kilometers above the earth, beginning a burn that will last for more than 6 minutes. During this phase, the vehicle will steadily accelerate from about 6.68 kilometers per second to nearly 7.64 kilometers per second, delivering the precise velocity needed to achieve its planned 450 by 450 kilometers circular low Earth orbit at a 60-degree inclination.
और यहाँ पे आप देख सकते हैं कि प्रक्षेपण नियंत्रण केंद्र में उत्साह का एक प्रसंग आ चुका है और आपके ऑन बोर्ड प्रक्षेपक पर्दों पर हम देख सकते हैं कि पेलोड्स या जो उपग्रह हैं उनका एक चित्र, यहाँ पे सारे उपग्रह अपने स्थान पर स्थित हैं.
That's right, Akhil. We've also had seamless transition from the
S4 performance normal
to the Bogor station, and now we are receiving strong telemetry from the Bogor as well as the Yatharga stations in Indonesia and Australia, respectively. The current altitude of the vehicle is 426 kilometers. Our target is near 450. We're traveling at 6.5 kilometers per second. And like we said earlier, OAM is essentially going to fire its Raman 2 engine for a cumulative burn time of nearly 6+ minutes. So this is the longest burning. It's the smallest in thrust, but it burns for the longest period of time. And it's all given to us by Raman 2, our main engine for this mission.
So Yash, it must be a really amazing feeling, right? I mean, you and your team worked on this engine to get it going, and it is finally taking us to space.
Yeah, it's a feeling that's really hard to describe. Me and my team, we worked on this engine to get it going, and it's finally taking us to space. This engine wasn't an easy design. Raman 2 generates 1500 newtons of thrust, and it employs 3 different types of cooling. As if one wasn't enough, we had to put in 3. So we have regenerative cooling, then we have radiative cooling, and we have film cooling. And all 3 of these need to work seamlessly in sync to deliver this phenomenal outcome. So I'm kind of glued to the screens right now. You might just see me peeking over to try to see what the chamber pressure, what the thrust, and what the temperatures are like. But I think I might have to hold for a bit and look at that data in a little while. So while I was talking about Raman 2 and how difficult it was to essentially design an engine this small, like I said, it's a relatively small engine, and the cooling design on this was exceptionally difficult to manage because the engine has to generate a lot of heat during combustion, and the temperatures can reach up to 2700 degrees. That's pretty hard for any metal or any material to sustain. In fact, many metals would just vaporize into thin air at those temperatures. So to make all of this work, we employ something known as regenerative cooling.
S4 performance normal.
Yeah, and we've gotten call out that the S4 performance is nominal. And so I was mentioning about the regenerative cooling, and the best way to understand this type of cooling is to imagine
14 minutes.
Multiple tubes joined side by side and then arranged into a circular fashion to form the thrust chamber. And these tubes, they need to be very, very thin to exchange heat effectively, which means that manufacturing is usually a challenge. And even after the temperatures would still be too high for normal metals to handle. And for this exact purpose, we employ something known as film cooling. And even though it sounds like a fancy name, it just involves injecting fine jets of fuel along the walls of the chamber to effectively add a barrier of colder gas between the combustion chamber and the metal walls. And essentially, one question I get asked very often is, if it's like that, then why is it called regenerative cooling, right? The whole thought process is the tiny tubes that we just talked about. Those tubes.
Performance normal.
Plus 15 minutes.
और यहाँ पर हमको मिशन नियंत्रण केंद्र से संकेत मिल रहे हैं कि चतुर्थ चरण का भी परफॉर्मेंस सामान्य है और अभी यान 450 किलोमीटर की ऊंचाई तक पहुंच चुका है जो कि उसका निर्धारित कक्षा है और कोस्ट फेज प्रारंभ है
जी हाँ and it's traveling at 7.3 kilometers per second at an altitude of 453 kilometers right now. So coming back to the regenerative cooling point of things, the tiny tubes around the thrust chamber of the engine essentially have fuel pumped through it.
S4 thrust cutoff.
And we've got confirmation that we have cutoff of the Raman 2 engine, which means
Solaris
that
satellite separate.
And we have separation of the Solaris satellite and the Scope satellite. Both satellites have been deployed successfully. And we have reached space on our first attempt successfully.
इतिहास में पहली बार एक यान ने अपने प्रथम परीक्षण उड़ान में ही उपग्रहों को उनकी निर्धारित कक्षा में स्थापित कर दिया है.
And now comes something very, very interesting. You can see on your screen from on board the cosmic bloom and the micro art. And we have sun rising behind it. It is the dawn of a new space era.
ये एक नए अंतरिक्ष युग का प्रारंभ है. सूर्य के किरण ने ये प्रकाशित कर दिया है.
Skyroot has actually completely redefined orbital flights, I guess, forever.
Yes, अवश्य. ये कथन बिल्कुल.
Plus 17 minutes.
So right now we are awaiting the Cosmoser satellite to
Vikram
perform.
1 Agaman mission is a grand success.
And we've heard call out from the mission director that the Agaman mission is a grand success.
सफलतापूर्वक प्रथम मिशन आगमन ने इतिहास के पन्नों में अपना नाम अंकित कर दिया है.
Hello space, we have arrived. Thank you for joining us today.
Thank you for being with us on this historic journey today. With Raman 2 and Vikram 1 now safely in orbit, we are not just reaching space, we are opening space for all.
आज की इस ऐतिहासिक उड़ान में हमारे साथ जुड़ने के लिए आपका हार्दिक धन्यवाद. विक्रम 1 ने सफलतापूर्वक सारे उपग्रहों को कक्षा में पहुंचा दिया है और भारत के अंतरिक्ष सफर में एक नया उज्जवल अध्याय खोल दिया है. धन्यवाद. जय हिंद, जय भारत.
Good afternoon. Good afternoon, everyone. We'll let them celebrate. Good afternoon. I am privileged to formally announce that the first ever Indian private sector launch has been successfully completed. Not only did Vikram 1 meet its mission objective, which was simply to clear the tower. It went all the way up to 453-kilometer orbit, successfully completed all the tasks, and something that is way beyond expectation for the very first orbital launch ever taken by an Indian private company. There is not much more that I want to say on this occasion. I would like to invite Pawan and Bharat to talk about their journey and how they feel today, this momentous milestone that Indian private sector space initiatives have had. And I would like to thank everyone involved in this. Of course, the Skyroot team. The Skyroot team has worked day and night to make this day happen, ably supported by the team from SAR, from Extended ISRO, and from InSpace. So thank you, everyone, for giving India this proud moment. Thank you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Technology is driving huge amounts of innovation, whether it is deep tech, whether it is biotech, whether it is climate tech, agri-tech, you name it. Young entrepreneurs are taking on risk, they are innovating, and they are keen to create value. And to me, that gives me the optimism of what India can become.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Hi, my name is Siddharth Sharma. I'm your NDTV Automate, and this is a show that is your ultimate guide into the world of automobiles and mobility. We've got a power-packed show lined up for you guys this week, so without any further ado, let's get started.
On the show this week, NDTV Automate brings top insights and comments of industry experts from the Fuel and Future Summit. we drove the Sierra EV in variety of road conditions. A performance sedan that can be practical as well. Meet the Audi RS3. Uber ups the safety game and adds new features in the app.
Now, first up on the show, we've got for you a hot topic that is debated across the country. What will power India's mobility scene by the year 2030? On NDTV with Automate, we did the first Fuel and Future Summit here in New Delhi. And up next, we get you the highlights from the show. Let's get straight into it. If we look ahead to 2030, what does a realistic Indian fuel mix look like across passenger vehicles, commercial vehicles, two-wheelers, and public transport? Mr. Deepak, if we begin with you.
Thank you for having me in your wonderful show. Congratulations for putting up such a nice event and very timely. By 2030, I feel, we are a huge country. We cannot look at one solution alone. We have to look at multiple clean pathway solutions. Obviously, today we are only seeing EVs being really taking a lead. But EV alone cannot provide a single solution for surface mobility. We have various other pathways. For example, Niti Aayog has come out with a report which also says that the flex fuel vehicle is one of the clean mobility solutions with net zero emissions. So I believe going forward, we will have to look into EVs along with FFEs, which is the flex fuel vehicle. We'll also have to have CBG, which is coming up in a huge way in the country. And a lot of OEMs have started launching their CBG vehicles. And in future, we'll also see the green hydrogen.
So, when we talk about the fuel mix, I'm looking at EVs being a part of it. We've obviously got the hybrids coming out and flex fuel vehicles, all of that. Hydrogen is the one that I feel will be not by 2030. I think that there's a lot more research that needs to go into hydrogen-driven or hydrogen-powered vehicles. But the mix will have to be with hybrids and EVs coming up, especially in the passenger vehicle segment.
One issue that everybody's been focused on, which is around readiness of electric vehicles. There's been a lot of focus around it. But how ready are we when it comes to electric vehicles? Are we giving enough attention?
I think right now we are pretty much in the phase 1, which is getting everyone ready for the EV and getting everyone accustomed to the fact that they need to start buying and start owning an EV vehicle. But of course, that's the first step. But I don't think we are that ready yet. With the infrastructure, with the grid, with the battery backup, the battery warranties, the resale values. There's a lot, I think, that one needs to think of. But that is definitely something that I feel that the government is working on, and it's a plan in action for the phase 2.
Sharvari, we hear a lot about electrifying everything. But realistically, we can't transform every vehicle and every segment overnight. So if you had to pick one segment where India should put its maximum effort right now, which one would it be and why?
If we have 100 vehicles on the road, just 5 are commercial vehicles. If you talk about road transport emission, these 5% contribute to 34% of emission. So very clear, disproportionate emission benefit can be ripped. Let's now go towards the energy security aspect. If we are importing 100 liters, around 50 liters of the fossil fuel is consumed by these guzzlers. When I talk about its commercial vehicle. So in terms of energy security, it's very clear, again, disproportionate benefit. The third aspect, I'll bring to logistic efficiency. We have been hearing that the logistic cost of India is pretty high, even compared to some of the Southeast Asian nations.
Are OEMs building products around the market, and is the demand, or are they trying to just shape the demand through new technologies?
But the success of those technologies, whether they're sustainable or not, it all depends upon Indian consumers. And if I compare the Indian consumers as compared to other global markets, they're very value conscious. And please take it with a pinch of salt. It doesn't mean they're price conscious. The affordability has gone up. premiumization has gone up. I mean, we have about 45% of consumers who are buying about more than 1 million cars. So, and you have people buying SUVs, people buying CVTs or automatics. Imagine about 5 years back, it used to be just 13% of automatics, and now we have about 30% of automatics. So I would say technology, whatever OEMs introduce, it's finally how consumers respond. India can buy any technology. India can buy at the right price, and India can buy the right use case. And as OEMs, we have to be very responsible what we are trying to introduce for the Indian buyers.
If you look at the charging infrastructure in India, there are about 7.5 million cars, not cars, a number of automobiles, 7.5 million, and there are 30,000 chargers. That is a ratio of 1:250. That means for 250 vehicles, there is one charging point. If you look at China or other developed countries, the ratio is about 1:10 or 1:20. So we are probably far behind, but for the first time, Indian government in the last budget, they have announced 700 crores investment into charging infrastructure. So we have a long way to go from 250 to, let's say, 20. I would say let's not look at 20 right now, let's look at 40 or 50, and we'll be able to solve it.
Next up on the show, we get you the first drive review of one of the most awaited EVs in India currently. Yes, we're talking about the Tata Sierra.EV. Ankur Taneja drove that one, and up next tells you whether it's worth your money or not.
Buying a new car in 2026 is harder than choosing something on Netflix. Petrol, diesel, hybrid, CNG, EV, then comes the ethanol compatibility. And by the time someone is done researching, you don't feel like buying the car anymore. Now, the powertrain that seems like the safest bet in current scenario is an electric vehicle. And this is the latest entrant in that space, the new Tata Sierra EV. I've driven it through city, on highway, and did some off-roading as well. So whether this new Tata Sierra EV deserves a place on your shortlist or not, let's talk about that. Now let's start with what matters the most. How it drives, how's the performance and comfort, and how does it drive in different modes that are there in this Sierra EV.
The Sierra EV is easy to get comfortable with. Power delivery is smooth, and being an EV, you get instant acceleration the moment you press the throttle. If you need quicker responses for an overtake, there's a boost mode which unlocks the full performance. Ride quality is definitely one of its stronger points. Broken roads, expansion joints, and potholes are absorbed nicely, making it feel comfortable both in city and on highway. Push it harder through some corners though, and you will notice some body roll that's expected from an SUV of this size. Thankfully, the seats offer good support and keep you planted. Seat comfort is another positive. Like most recent Tata cars, the Sierra gets supportive seats that should keep occupants comfortable on longer journeys. One area that still needs improvement is braking. The stopping power is there, but the pedal feedback doesn't feel as reassuring as it could. I also drove the Sierra through Tata's off-road obstacles with the dual motor setup and terrain modes. It tackles steep climbs and uneven surfaces without much fuss. But if you are expecting to have a little fun on the loose gravel, there's one limitation: you can't completely switch off the traction control, so wheel spin isn't really an option.
This Charge Zone fast charger is a reminder of how much India's charging infrastructure has grown. But even with better infrastructure, anxiety about the range still remains. But how does the Sierra EV performs when it comes to range? Let's talk about that.
When I picked up the car, it showed 500 kilometers on a full charge. During my drive, I covered around 88 kilometers, driving almost entirely in city mode with region level 1 across both city roads and highways. After that, the indicated range dropped to 373 kilometers. Based on this drive, expect somewhere around 370 to 380 kilometers in mixed real-world conditions. Of course, your driving style and traffic will influence that number.
Now, I know the looks are subjective, but the Sierra EV is one of those cars that will probably split opinions.
Some people will like the design immediately, others may need few days before it starts making sense. It has clear, upright stance and plenty of road presence without relying on unnecessary cuts and creases. Inside, the cabin feels noticeably premium. The dashboard is dominated by 3 screens stretching across the width, and unlike some cars where extra displays feel gimmicky, this layout actually feels well integrated. The feature list is extensive: ventilated power seats, panoramic sunroof, JBL audio system, augmented reality, heads-up display, air purifier, auto park assist, summon mode and plenty of ADAS features mean there isn't much left to ask for. That said, I did notice a couple of things. During the drive, a TPMS warning popped up even though there wasn't any actual tire issue. Since these are early drive vehicles, it could simply be software. Also, the touch controls on the steering wheel are easy to press accidentally while making tighter turns. It's not a deal breaker, but it's something you'll notice.
So should the Sierra EV be on your shortlist or not? I would say yes, but not for the reasons you might think.
Forget the badge for a moment. If you judge it purely as an electric SUV, it gets a lot of important things right. The ride is comfortable, performance is effortless, the cabin feels modern, and the equipment list is among the strongest in the segment. It's not perfect. Better brake feel and improved steering controls would make the driving experience even better. But if your priority is spacious, comfortable, family EV with enough performance and technology for everyday use, the Sierra makes a convincing case for itself.
Next up, we get you an exclusive drive of the Audi RS3, which is a tuner's delight. This is the Audi RS3. It's an automated car in focus. It has 4 doors, almost 400 horsepower and a 5-cylinder, very special engine. This is exactly the kind of car that India deserves, but will never get. Let me tell you why. There are fast cars, and then there are cars built around an engine so unique that enthusiasts talk about it long after the ignition is switched off. The heart of the Audi RS3 is a 2.5-litre turbocharged 5-cylinder engine producing 394 horsepower and 369 pound-feet of torque. 5-cylinder engines are rare today, and that's exactly what makes this one special. The firing order creates a soundtrack unlike anything else on sale. It's part rally car, part performance sedan, and entirely addictive. Power is sent through a 7-speed S-tronic dual-clutch transmission and Audi's Quattro all-wheel drive system. But this isn't just traditional all-wheel drive. The RS torque splitter actively distributes power across the rear axle, allowing the car to rotate far more naturally through corners while dramatically reducing understeer. In simple terms, it makes the car feel playful without losing the confidence Audi performance cars are known for. Well, the numbers are impressive. It can do a 0 to 100 km/h dash in 3.6 seconds, which is faster than the BMW M2. But it's not about how fast it goes. It's about how encouraging it is when you want to do that. Driving through Toronto, the RS3 immediately reveals its dual personality. At low speeds, it feels civilized. Comfortable, refined, exactly where premium Audi sedans should be. But the moment you lean into the throttle, the character changes completely. The 5-cylinder engine comes alive, acceleration is immediate, and suddenly you're traveling at speeds that would make many exotic cars uncomfortable. Yet somehow the RS3 remains composed, stable, and predictable. This is where the RS3 starts making a lot of sense. Because unlike many performance cars, it doesn't ask you to compromise. You still get 4 doors, you still get rear seats, and still get a usable boot space with 321 liters of luggage capacity. You're still getting Audi's premium interior experience as well. The virtual cockpit remains one of the best digital instrument clusters in the business.
Material quality feels genuinely premium, and the overall cabin experience is exactly what buyers expect from a luxury performance sedan. This isn't a weekend toy pretending to be practical, it's a practical car pretending to be a supercar. And it does both remarkably well.
Now this is where it gets frustrating. The Audi RS3 is fast enough for the enthusiast, practical enough for a family, and compact enough for the Indian roads, but sadly, we may never see an M2 competition in India.
The Indian performance car market has matured significantly. Buyers today want cars that are exciting but still usable every day. The RS3 fits that brief perfectly. It offers practicality of a sedan, the confidence of all-wheel drive, and the luxury expected from Audi. The performance that can genuinely challenge cars from a much higher segment. There's also a massive global tuning community built around this platform. The engine has become famous for handling significant performance upgrades while maintaining reliability. For enthusiasts, that's a huge part of the appeal. And for everyday users, it remains one of the easiest performance cars to live with. The only real compromise, fuel efficiency. But then again, nobody buys an RS3 expecting to save fuel. Now, if there is one criticism, it's that the RS3 almost hides its performance too well. From certain angles, it can look like just another premium sedan. Some enthusiasts may want more visual drama.
The Audi RS3 reminds us that performance isn't about chasing big numbers. Sometimes it's about putting a smile to your face every time you start a car, and that feeling is becoming increasingly rare.
The Audi RS3 is proof that sometimes the most exciting performance cars aren't the biggest or the most expensive. And the RS3 does exactly that.
Next up, it's time for NDTV Automate News of the Week, the biggest headline makers, movers and shakers from the world of automobiles and mobility, all in one place.
India-UK FTA has now kicked in, bringing British luxury cars into sweeter spot for Indian buyers. Import duty on eligible UK-built models has dropped sharply, and brands like Rolls-Royce and Jaguar Land Rover are among the expected beneficiaries. Taking Brezza in a new direction, Maruti Suzuki has opened bookings for the 2026 version ahead of its launch this month. The updated compact SUV is expected to bring refreshed styling and new features while adding a turbo petrol engine. On the side of electric cars, Kia has revealed the Ceros EV. Highlights include 526 kilometers of claimed range, 2 battery pack options, 5 trim levels, and presence of features like ADAS. Rivals include Tata Nexon EV and Mahindra XUV 3XO Electric. In a bid to expand its model lineup, MG has unveiled its new ADAPT platform for future electric and hybrid models. The architecture will underpin multiple upcoming products as the brand expands new energy vehicle lineup.
Next up on NDTV Automate is our safety buddy. Anirban Mitra checks out a few new features that are added for additional safety on your Uber app.
India's largest ride-hailing service provider has taken definitive steps to improve safety. So every time you book a cab on Uber, you should rather be focusing on the business pitch, or maybe work on the project that you need to submit in the office before deadline, or dropping your kid for the next swimming class. Who doesn't want an extra layer of safety? Part of the Uber Surakshit program, there is a fourfold emphasis. Record My Ride. Both drivers and passengers can now record a video in case they feel unsafe during the trip. But the most important update has to be the quick call button to avail ambulance service in case of need. One click on the app and the driver or passenger can reach out for an ambulance.
Privacy has been a core design principle of these products from the very beginning, meaning that the rider, nor the driver, nor Uber can access any of these recordings. And it's stored locally in an encrypted fashion within the Uber app. Nobody can view the recordings, nobody can look at the recordings, nobody can access it, edit it. And if it gets submitted to Uber as part of a safety report, so if someone says that I faced a safety issue on this trip, and if this recording is sent to us, it's only then can Uber even access that recording. So from a privacy standpoint, nobody has to worry about anything. If no report is made, this recording gets automatically deleted for 7 days.
Press a button, book a ride. That has been Uber's simple mantra across more than 125 cities in India. Amid this diverse need, two-wheelers play a major role, especially for the last mile connectivity. But it is about finding a balance and not falling for shortcuts. Uber ensures a multi-level checkpoint system for its rider partners. Helmet, headlights, brakes, and several key aspects are taken into account every time a rider commences the journey.
So we focus a lot on telematics and we identify behaviors that may be considered risky, like example overspeeding. So if we see that a vehicle has been overspeeding, we will send alerts to the drivers to change their behavior. So it's all about understanding those signals and being able to use those signals to intervene at the right moment and then promote safer behavior.
If you are traveling alone, feeling concerned, you can update your live location with your loved ones. In fact, it can be put as default through the Uber app. With over 40% market share in the ride-hailing services, Uber is actually showing commitment towards safety with equal importance. I think it's all about a matter of time that rivals also pick up features like this in the Department of Safety.
And with that, it's time for us to say goodbye on this edition of NDTV Automated. Don't forget to follow us on our social media handles. And for the latest news, views, and reviews, don't forget to log into ndtv.com/auto. Always remember, wear a seatbelt, follow speed limits, respect the drivers around you. This is your automate, Siddharth Sharma signing off. I'll see you guys in the next one.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
First of all, my compliments for NDTV to bring back the leadership awards, and in terms of both award categories and nominees, it's a very well defined process they followed, and it was pretty difficult for us as jury members to choose only one awardee among the nominees, and my compliments to the team.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
the news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Good afternoon. Thank you so much for tuning in. This is the show that's going to get you a roundup in terms of all the banking behemoths that have reported their numbers thus far. In fact, let's begin with just that. Take a very quick look at some of the numbers that have come out. When you talk about Kotak Mahindra Bank, in fact, you do have an inline set that you're looking at largely, and you do have the net profit that's jumped slightly on lower provisions. So you're looking at the NII that's up about 9.2% odd, operating profit up about 10.2% odd as well. And let's also talk about the net profit that's also up about 26%. In fact, let's get Piyush in for all of those details. And it's looking like quite an inline set, first things first when you talk about it, Piyush.
Yeah, absolutely. In fact, Kotak has done quite well, in terms of margins. Also, it has improved 2 basis points quarter on quarter. If we see the asset quality, it remains stable. The GNPA is almost flat at around 1.18, in line with the expectation. Then the NII growth has also been steady. In this quarter, at least with Axis, we saw a little bit of pressure on margins, but Kotak seems to have done well here. In terms of provision, the bank's provision were lower on a year-on-year basis, but on a quarterly basis, they were slightly higher than the last quarter. Operating profit has jumped because of this lower provision. The slippages of Kotak have risen slightly to 1,321 crore versus 1,118 crore in the last quarter. Overall, a decent set of numbers for Kotak. Double-digit growth in both loan and deposit, and margin has also improved.
No, absolutely. And, it is a very heavy day for you, Piyush. Let's also talk about Axis Bank that's reported its numbers as well. When you talk about the results largely looking to be in line with estimates, and you do have that modest growth coming in. When you talk about the net interest income, the margins have declined, asset quality has also declined. Let's talk about the fine print here when it comes to something like an Axis Bank as well.
Shreyansi, Axis Bank, if we see in terms of Q1, they have reported a net profit. But if we look at the fine print there, it is essentially driven by the lower amount of provisions that the bank has made. The provisions have actually fell sharply from around 4,000 odd crore last fiscal to only 2,223 crore in the current quarter, Q1 FY27. So there's a sharp decline in the provisions. If we see on the other metrics as well, the gross slippage ratio for the bank has increased to 1.79% as against 1.63% the last quarter. The bank's net interest margin again, it has been stable at around 3.46, but it is lower if we see if we compare it Q on Q from 3.62% last quarter. So in terms of margins, the figure look bad. The profit essentially seems to have been driven by lower provision. NII growth is in the single digit. So a little bit of a mixed sort of a thumbs down sort of a quarter for Axis Bank in Q1.
No, absolutely. And let's also, speaking of single-digit NII growth, let's actually talk about PNB as well, Piyush, because it's looking like quite an interesting set. About 4% uptick coming in on a quarter-on-quarter basis. When you talk about NIIs, it's the profit figure that's also in focus.
Interesting thing about PNB, Shreyansi, is the fact that the bank's profit has risen, and very handsomely the bank has been able to cut down on its operating expenses. Operating expenses, in fact, have fell sharply for Punjab National Bank. It's down by 13% year-on-year to 7,613 crore. The NIM has risen for the bank by around 3 basis points quarter-on-quarter. The provision, of course, last year in this quarter, Q1 FY26, the bank had to set aside massive provisions for the wage revision that the government had brought in. So this year, the provisions have fell sharply from 5,000 odd crore last year to around 1,675 crore in the reporting quarter. So OPEX is down, provisions are down, the NII growth is stable. Overall, a strong set of results from PNB this quarter.
No, absolutely. And let's also get in Aditya Shah, founder, Hercules Advisors, joining us right now on the earnings fine print when it comes to all of these banks as well. Aditya, thank you so much for taking time out again for us. Just wanted to try and understand what you think about Kotak Bank in terms of the first cut here. How are you looking at the numbers?
So for Kotak Bank, just give me out. Yeah. So for Kotak Bank, the loan growth at about 16%, the deposit growth at about 12%. Looks really very good from a asset quality perspective. The credit cost at about 0.46%, a tad bit higher than last quarter. That also seems to be steady. So from my perspective, steady set of numbers from Kotak.
Piyush on this side. I wanted to understand, Kotak has been able to report 2 bips rise in its net interest margin, which is a very key indicator of bank's profitability. Do you feel the bank will be able to continue growing its NIM Q on Q in this fiscal?
I don't think there's a limit to which a bank can grow its NIM. If you look at the NIM from my perspective, in Q4 it was 4.67%. Right now it is 4.53% as much as I can see from the presentation. So from my perspective, Kotak historically has been able to maintain the NIM between 4.5% to 5%, and that's where it should be at this stage.
Yeah, we have seen the fresh slippages. If we compare it with the last quarter, fresh slippages in Q1 stood at 1,321 crore rupees, as against 1,018 crore rupees, in the last quarter. Slightly up. How do you see this? In fact, we have seen this with Axis also, slightly higher slippages. How do you see this?
Yes. So credit cost both for Axis and Kotak have increased. This is contrary to what other banks have reported. So we need to understand what is the reason for this higher slippage that is coming in.
No, absolutely. And we also have Mayuresh Joshi, Head of Research at MarketSmith India, also joining us right now on the show. Thank you so much, Mr. Joshi, for taking time out and joining us. First things first, wanted to try and understand what you think about the first cut coming in as far as Kotak Bank is concerned, and we'll come to the other banks in a bit as well.
Very good. I think the update that had come through from Kotak was obviously a little bit on the softer side. In terms of the slippage number, it's a tad bit higher in terms of a sequential performance. And therefore, I think it will be interesting to know whether the number stabilizes at this level going forward. And the second element, obviously, in terms of the provisioning that might be required, which might also be a tad bit higher as we head into Q2. So I think a little bit soft, which was expected in terms of the updates that Kotak has probably delivered in this quarter.
Absolutely, Aditya. I just wanted to come back to you in terms of the profit figure that you have coming in, the net profit figure, about a 26% uptick coming in for Kotak Bank. Just wanted to quickly get your take in, and we'll talk about the other banks in a bit as well.
No, as I said, it's a steady set of numbers. Profitability is outcome of various things, including the slippages and the NPAs. So the only thing that we need to see in the result is the credit cost. How did the credit cost move? Where did they see a lot of NPAs? And also, secondly, as I said before, the management. What is the pointer on the management? Who is going to take over? If any guidance on that, that would be something that we need to see on the Kotak result.
In fact, Aditya, yesterday our Federal Bank had also released their results, and we had asked Mr. Manian, because he was the ex-deputy MD at Kotak, whether he'd be interested. He declined to answer on that front, which is correct. For Kotak, we have seen even in cards portfolio, if we see Q1Q, there's a little bit of a degrowth there. Is the bank being cautious on that front? Overall, on the unsecured front, how do you see the bank, moving ahead?
So right now, per se in the market, I have not seen any bank reporting any meaningful rise in the slippages on the unsecured side of it. The unsecured side of the market is extremely risky, but we are coming from a phase where we had very high slippages on the MFI and the unsecured side of the market. I think those will start to pull off. Many banks will be cautious in lending to unsecured retail solely from the perspective of slippages. So I understand what Kotak is really doing, but we are coming out of a time where high slippages were there on the unsecured retail side as well as the MFI side. I don't think over the period of next 1 or 2 quarters we will see those high slippages. However, you never know, if the war continues to elongate, there could be a problem across the industry. So we need to monitor this situation.
Absolutely. And talking about higher slippages as well, let's also talk about Axis Bank. Mayuresh, wanted to take this question across to you. Just wanted to try and understand what's your first cut coming in when it comes to the numbers. Largely looking like an inline set, but higher slippages seem to be biting here as well.
No. So I think it seems to be in line with what the street probably expected the bank would deliver. But the slippages quotient is obviously coming a tad bit higher. And that is what we probably need to understand for the larger banking space as a whole. Is this somewhere where you're looking at a component of lending towards more riskier assets that have probably happened in the last few quarters, which are coming up on the balance sheet, and whether this is going to get capped off at some point of time in Q2? I think that concern is something that the management will probably have to allay, because if that probably persists in some manner, the credit costs of the bank go higher, the provisioning of the bank start going higher, and then that has a immediate short-term impact, at least from a near-term perspective, in terms of return ratios and diluting the book value. So I think it becomes extremely pertinent to understand both these aspects, whether slippages are going to probably get capped off at this level, and whether lending to more riskier unsecured assets might actually probably just taper off as we head into the next week.
Hi, Mr. Joshi, Piyush here. I wanted to just follow up on this front on Axis asset quality. See, the slippages have risen, but the bank has, cut down on its provision quite sharply. It was around 4,000 odd crore Q1 FY26. It has come down to 2,200 odd crore. So quite a, sharp fall that we have seen in the provisioning, which has also aided them, reporting a healthy bottom line. How do you see this, especially when slippages are higher? You're supposed to make more provisions, and also ECL is also coming up. So how do you see this move by the bank?
So I think we just need to understand that line item a little bit in introspection. Is there some amount of adjustment that has been done of excess provisioning of the last year, and that has probably got adjusted in terms of the provision figure on an absolute basis? It is something to be watched out for. So I think might need to just delve into a little bit deeper whether this has been the case for that reported number.
Also, Axis has seen the margin compression happening in the reporting quarter. The margin is down 16 basis point quarter on quarter. What may have led to this decline, and do you see the bank's margin improving going ahead?
No, so I think this is again a classical case where the repricing between assets and liabilities comes with a lag. And therefore, I'm not so perturbed because I think the lag always persists for a quarter. And therefore, if there is no significant move in terms of the interest curve, which I don't think so that the RBI is going to probably do, and the yield is expected to be around the current level, my own sense is that this repricing imbalance which happens for a quarter might start stabilizing. So I think the margins should stabilize in a range. I don't see that to be of an entrance, and this basically turning out why the margins might have been a little softer as we speak.
No, absolutely. And Aditya, I wanted to take it across to you when it comes to Axis as well. Just wanted to try and understand what you think is important to watch out for in terms of the management commentary as well.
With respect to Axis Bank?
Yes.
So on Axis Bank, as I said, all the quantum of slippages out, from where did those slippages come from, that is something that is the most important thing to watch out for. And also the ECL norms, how are they going to slowly and steadily provide for that? And top management stability. We've seen a CFO moving out from Axis. So top management stability is something that we will watch out for.
Aditya, on PNB, I wanted to get your views. The bank has been able to cut down on its OPEX very sharply. The results of PNB, the PAT has grown handsomely, essentially because of lower provision. In same quarter last year, there was this wage-related provision that they had to make. So the provisions have fell down quite sharply in this quarter, aiding their bottom line. But what interested me the most is the way the bank has been able to cut down on its OPEX, 13% down year on year at 7,613 crore. Is the bank becoming more efficient? What may have led to this sharp cut in OPEX? And do you in general also feel that PSU banks are improving their efficiencies and OPEX is likely to fall further for PNB and other set of peers, public sector banks?
So as scale comes in, obviously operating leverage is something that will kick in. So from my perspective, it is nothing but operating leverage. As profitability continues to keep improving, as loan growth comes in, slippages continue to be lower. Of course, the operating leverage will mean that the OPEX continues to move down. I think we are at the peak operating leverage for almost all PSU banks. From my perspective, as credit costs will continue to rise from here on, the operating leverage as well as the profitability will start to come down a little bit. So from my perspective, over the next 2 to 4 quarters, they will be the peak profitability quarters for most of the PSU banks.
Aditya, while these efficiencies come, for PSU banks, PNB, if we see the headline net interest margin figure continues being, it has improved 3 bips, but it's still at 2.50%, which is very low in comparison with similar sized private peers. Do you feel, the bank will be more savvy with regard to its, ALM, the pricing that they do? Some banks are on FCNRB front, some banks are offering handsome deposit rate, and the leverage structure is also very high. I just want to understand, where do you see PNB's NIM going by the end of the fiscal?
So from my perspective, I don't think PSU banks like PNB ever have a deposit problem. They have a very strong franchise. So from my perspective, deposits should never be a problem. NIM, I think for PNB, though I don't track, should be in the similar range. I don't think any positive or surprise on the NIM should be there.
No, absolutely. Mayuresh, also wanted to take it across to you when it comes to PNB as well. You do have that OPEX figure that's declined some 13% as well, and the NII is in single digits just about. Just wanted to try and understand what you're thinking of the numbers. Looks like an inline set first cut.
It looks in line, but I think the bias would be largely with more qualitative banks, in my opinion, at least at markets with India. Because our belief is that the consistency that you probably need in terms of how the asset quality movement is probably expected to play out. And therefore, I think the expectations in terms of stronger balance sheet growth probably still persist with a few of the mid-private sector banks as we see it, and maybe the larger PSU universe as this mentioned.
No, absolutely. And what else are you watching out for in terms of the commentary as well, all in all, when it comes to all of the banks that have reported their numbers thus far? Anything that you haven't mentioned of virtue?
Well, I think generally, I think it should be pretty steady state in terms of how they are looking at advances growth, the overall deposit accretion as well. Asset quality is largely expected to be stable. Provisioning seems to be reasonably placed as well. Slippages might seem to be of a concern, and therefore two things to be watched out for. Whether slippages are capping off, as I said. Are they looking at more riskier elements in the balance sheet? And therefore, I think these two aspects will play a critical role in terms of defining the return ratios. NIMs, as I said, more or less the repricing lag is out, but largely expected to stay in a range. I think if they address the issues in terms of tackling slippages or slippages getting backed off and riskier elements of the market being capped off as well, though it might restrict to a certain extent balance sheet and aggressive balance sheet growth. I think this is what the street would ideally like to watch out for. Valuations, risk reward broadly remain in favor of banks as we speak.
Yeah, Aditya, just my final query to you. There is this expectation that FCNRB deposit scheme is likely to pick up in a meaningful manner, bringing substantial amount of inflows. We have read, reports mentioning how after the initial bump, the inflows have sort of, gradually slowed down. Do you feel banks will, report, especially the larger ones, HDFC, ICICI today, they will report meaningful inflows, or you feel this scheme will take some time to pick off? Because this is a very, beneficial for both the bank as well, because RBI is bearing the hedging cost, and the client as well, because they are getting, of course, the higher returns, and leverage makes it even better.
So deposit growth is the raw material for a bank. System-wide, we've seen banks really struggle for deposit growth. We've seen Union Bank report about 3% deposit growth. So banks are really fighting out for deposits. We've seen HDFC Bank already report the deposit number in the quarterly update at about 10%. FCNR is just one bit of the story. It all depends on where the retail money really moves. If you see the stock market not giving returns for longer period of time, obviously a lot of money will also start to chase deposits again. So from my perspective, FCNR is one part of the story. The other part of the story obviously is how does the retail money really move, and from there on we have to see. So from my perspective, deposit growth in the system will continue to remain a challenge. Banks growing their deposits above 10% have done pretty well. We've seen only few banks grow their deposits above 10%. Axis was really strong at about 18 to 19%. So from my perspective, 10 to 15% of deposit growth should be fine for it.
Absolutely, and thank you so much, Aditya, as well as Mayuresh, for taking time out and joining us this afternoon. When it comes to the first cut coming in for some of those numbers as well, and Piyush, it's looking like, just as Aditya, really rightly summed it up, FCNRB is just one part of it. There's actually a lot of moving spokes to the wheel, a lot of commentary that we're watching out for. It's definitely the highest slippages, and that's one line item that Mayuresh, mentioned that we should be watching out for in terms of how the banks also justify that as well. lots to watch out for in terms of the commentary.
Absolutely, like you mentioned, slippages, where are these coming from? Like Aditya said, Mayuresh also referred to it. Which segments of loans are being stressed? Whether the unsecured cycle, that adverse cycle we saw, whether it is coming back in the vogue. Separately, also, we need to be careful about the margins of banks because, Axis has reported a decline. Kotak has been able to report a slight uptick, 2 bips sort of a uptick Q on Q. The margin trajectory is very important to watch out. And of course, the bank's broader commentary with regard to, the West Asia conflict, its subsequent impact on the bank's loan book, how many loans it has given under ECLGS 5.0 banks have given, because ECLGS is meant for MSMEs who are affected by the West Asia conflict. And the FCNRB deposit inflows, like we just discussed, these are some of the key metrics that we need to watch out for. What is the guidance on both credit and deposit growth for the full year?
No, absolutely. And Piyush, the good news is that it's an inline set of numbers largely that you're looking at. NIIs in low single digits, barring that Kotak Bank as well. If you just tuned in, it's inline set of numbers coming in for all three of those banks. But let's also recap and talk about some of the other banks that have reported numbers and some of the commentary that has already come in terms of RBL Bank as well. The Q1 profit surged about 27%. The net interest income rose above 1,600 crore rupees as well. And the profitability definitely remains in focus. The street, of course, is paying particular attention to the credit quality trends, credit card slippages as well, and the management's outlook coming in terms of growth. Let's go across and listen in to slice that commentary.
The credit card is concerned, it is not the stress of the book, it is the transitional issues which we have been facing for the last 1.5 years. It's getting culmination point. That's why you see this spike as far as the slippages in the card is concerned. See, we will not be growing for the sake of growing. We will be doing very responsibly. Our execution is what we will be focusing on. And we have been growing in the range of around 20-25%, which will be the minimum basis on which we will be growing it. See, approximately 200 crores is what we have done it under this scheme.
Alright, then that's the commentary coming in as far as something like an RBL Bank is concerned. But let's also talk about Federal Bank, and they've outlined their growth priorities after reporting the first quarter performance as well. The management is really highlighting the credit expansion, the ECLGS 5.0 loan support, and the margin outlook. And when you talk about the numbers as well, the names, of course, have expanded, and the asset quality has improved sharply as well. Let's go across and listen into the management commentary now.
Primarily, this will be driven by customer needs, and depending on customers that require that kind of support, we will offer that. We don't have a target on that. We had earlier last year, towards the end of the last year, we had given a general guidance that our NIMs, we expect, at least for the next 3-4 quarters, we expect it to expand by 5 to 6 basis points a quarter.
Alright, then that's the commentary coming in from Federal Bank as well. So largely an inline set of numbers coming in for something like a Kotak Bank, Axis Bank as well as PNB as well. And the line item to really watch out for is higher slippages as well. And we'll get to that commentary when it comes in from the managements as well. But from one sector to another now, let's talk about Reliance Industries that posted an inline set of numbers in the first quarter with its revenue rising, aided by the OTC and the Geo segments as well. In fact, Somit is joining in with the fine print here.
Well, Reliance Industries reported pretty much in line set of numbers in the first quarter of FY27. Revenue and EBITDA were up around 5 to 8% on a sequential basis. Margins came in at close to 15.4%, while net profit jumped by around 23% on a Q-on-Q basis. If you look at the segmental performance, the O2C segment EBITDA was up 17% and was the star performer, and this growth was largely led by expansion in the petrochemical spreads and also because of the benefits that SEZ refinery saw from higher GRMs. The retail EBITDA, that was a dampener, down around 9%, the biggest drop that we have seen in the last 20 quarters owing to lower revenue and higher investments in the digital business. The oil and gas exploration EBITDA, that surprised positively. It was up 19% on a sequential basis, largely owing to stable production and lower costs that we witnessed in the first quarter of FY27. When it comes to the telecom business, the Reliance Jio subscriber addition and ARPU numbers are pretty much in line with analyst estimates. On the bottom line front, higher other income aided, while higher finance cost also weighed on it. Now, finance cost was up nearly 27%, while other income jumped nearly 47% on a Q-on-Q basis. And the increase in finance cost could also be because of a weaker rupee that we had seen. Overall, if you look at the balance sheet, that net debt decreased slightly to close to 1.23 lakh crore rupees as against 1.25 lakh crore that we had seen in the previous quarter, while the leverage that remained largely stable, that is net debt to EBITDA, at around 0.6 times. Overall, it was pretty much in line with O2C and oil and gas exploration coming up ahead of the street estimates, while retail was a dampener and Geo was again bang on in line with what the street was anticipating.
No, absolutely, and thank you so much, Samit, for joining us with that earnings fine print. So it's the retail EBITDA that was the dampener. Overall profit rose about 23% as well. But let's also end this power-packed show on a very good note. The World Cup has always been a stage where stars become legends. Let's talk about that as well. This tournament has been no different, with young sensations announcing themselves and seasoned champions delivering when it mattered the most as well. You do have Argentina and Spain preparing for the biggest match of them all as well. And here's a look at the 5 players whose brilliance has defined this World Cup.
Just 18 years old, but already one of the biggest stars of the tournament, Lamine Yamal has been the creative heartbeat of his side, constantly troubling defenders with his pace and vision. He won the decisive penalty in Spain's semi-final victory over France and is the frontrunner for the FIFA Young Player Award. The final match will also make him the 3rd youngest player ever to feature in a World Cup final. England's campaign may have ended in the semi-finals, but Jude Bellingham's performances stood out throughout the tournament. He scored 6 goals in 7 matches, with 4 coming in the knockout rounds. His brace against Norway in the quarterfinals powered England into the last 4 and underlined his importance to the team. Norway's historic run to the quarterfinals was driven by their prolific striker, Erling Haaland. He finished with 7 goals in just 5 games, scoring in every single group stage match before adding goals in both the round 32 and round of 16. His remarkable strike rate was the best of any player at a tournament. France fell at the semi-final stage, but Kylian Mbappe delivered another outstanding World Cup. 8 goals and 3 assists meant he was directly involved in almost 69% of France's goals. Even in defeat against Spain, he remained the biggest attacking threat on the pitch. At 39, Lionel Messi has once again dominated the biggest stage. He heads into the final with 8 goals, leading the race for both the Golden Boot and the Golden Ball. During this World Cup, he also became the highest scoring player in World Cup history and set up Argentina's dramatic late comeback against England with 2 crucial assists. Rika Roy for NDTV.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
thank you for taking out time and speaking with NDTV Profit. Sir, could you please take us through that the India export to UK after this UK deal coming to force today, that's July 15, how they are going to take the zero duty access on an immediate basis compared to those who are getting in a phased manner?
I think from India's exports perspective, most of the goods we are getting it from day one. So all the Indian exports, majority, like more than 90% of the exports goes zero duty on day one. So from India's exporters perspective, it is a good deal for them and they should be able to take advantage. This is something that they have known for last 1 year after the agreement was signed. And I think Indian industry has also been preparing for this deal. That should be good for them. From UK industry perspective, yes, we are giving them a clear line of sight that which are the areas they can look at. India is a fast growing market, a major economy, but there are sensitivities in multiple sectors. So there is calibration in some of the duty opening up, and there are certain exclusions that they will have to leave.
Sir, as you just rightly mentioned, just to follow up on that, all those sectors which you're talking about, your gems and jewelry, apparel, etc., if you could give a timeline in 6 to 12 months, how much benefit are these sectors going to see?
See, immediate tariff benefits are there, like gems and jewelry sector gets an immediate benefit of 4%. Textiles gets an immediate benefit of somewhere between 8 to 12%. That's the same figure for around leather and footwear also. So there's an immediate benefit and there are existing supply chains. Our industry has been exporting to UK market in a small measure, and these supply chains will start taking advantage of these duty benefits. Building on these duty advantages, because our exports will become more competitive, and we believe that will help them grow market share in the UK market, which is like for labor intensive sector, it is more than $50 billion. It is $30 billion for textiles, it is $8 billion plus for leather goods. So this is a huge opportunity which they will be able to leverage upon in months and years to come.
So do you have any additional conservative estimates essentially to kind of capture the UK market after this, of course, deal, and any bilateral trade sort of in mind by 2030?
Our expectation is that today we are around $56 to $60 billion of bilateral trade between the two countries, goods and services combined. By 2030, we should be somewhere around $100 billion. And that's a good jump for in both the bilateral trade between India and
Okay.
Right. So, services sector is a big pillar of this FTA, and going by how our exports are also growing, services have already eclipsed merchandise exports. Talk to us about this social security agreement that is a part of this, and also talk to us about the various professions that Indians can now engage in the UK with, in terms of how much employment is generated abroad for Indians as well.
One, UK is also a strong services economy. Their services imports are more than $400 billion. Our exports are in the vicinity of around $21 billion. And the commitments that UK has taken under this agreement is one of the most aspirational and ambitious. They have given policy commitments under 137 subsectors as compared to India opening up for 107 odd sectors under this agreement. In addition to that, there are commitments around mobility, there are commitments around inter-corporate transferees, there are commitments around some professional services, some professionals like musicians, chefs, also some special visa categories have been created. So these commitments will help our companies to plan better, and both these economies, Indian economy is also a services driven economy in a big way with more than 50% of the GDP coming from services. So I think this will actually help both sides to grow services trade also in a big way. The double contribution convention has been a very important ask of India for years now. Every Indian individual who goes on for temporary work to UK or working for 6 months to 5 years, they end up paying 23% of their salary as part of social security cost, which is kind of a sunk cost. They are not able to get any benefits out of it. Through this double contribution convention, now they will be able to contribute that money in their social security accounts in India and be exempted from doing the same in UK. That is a good plus for them. It will make our employees, our officers, our professionals also very competitive. Our company is also very competitive in this market, and that will also, we are estimating, will lead to savings of around $450 million annually, or 75,000 professionals on an average which were working in UK.
And this is annually.
It is.
It will go up as well.
This is and in case there is more mobility, more professional go on, the savings will be much.
That's a significant number, sir. I would say quickly wanted to check because I'm curious on this part that, how this UK-India deal is different from all those deals which India has signed, and what exactly lesson have you learned from all those existing deals and the one those are in the pipeline to shape up India-UK deal?
I think there are two aspects of India-UK deal which positions it differently. One, both major economies coming together, fifth largest and sixth largest economy coming together. Two, I think the market access agreement or commitments on those sides are aspirational. This is the highest that India has done beyond its FTA precedents, and this is one of the best that UK has also brought to the table. And on the second front, I think from the India, it is a first in the kind that we have agreed and we have negotiated many policy areas which are a first, which are now becoming important for trade. We have negotiated trade and labor, trade and environment, trade and gender. So there is multiple new policy areas which we have, IPR, we have. So there are areas which we have negotiated which is first for India, but that also goes on to say how the new India is a bold India, new India is a more confident India.
So there were also, of course, every FTA comes with its sticking points. For this FTA also, there was the carbon tax and the steel safeguards, both of which came out later thanks to the EU, similar rules with the EU as well. Talk to us about how India has navigated the steel safeguards that the UK has come up with. We are hearing that exports will now go up to cross $1 billion on that front. And on the carbon tax, I think that is still in works. Talk to us about both those aspects.
See, the steel safeguards came after the agreement was signed. So when the safeguards came, and this is a policy decision of a country. So like every other country, we also got into negotiations and we have figured out solutions outside the agreement. We have not touched upon or opened the agreement, and if you look at our solution is a combination of two, wherein we have worked with UK side to help them to work together to have a higher quota for India, which helps us to serve the market we were having for last few years and also have some scope to grow. And at the same time, we worked around under the double convention, contribution convention, to see that if we can add on to the additional 2 years, which was the pending ask of India, and which means value for us, then I think there is an even trade-off and we can proceed ahead. So that was how we discussed, and this enabled us to find solutions outside, signed and approved. So that helps us to reach to this EIF on 15th July today.
That is a point. My final two quick questions. One, what's your outlook on the merchandise export for FY27 given the kind of heightened geopolitical uncertainty and of course renewed Iran conflict? So what's and of course you're signing deals, so of course you will get, India export will get access opportunity. How are you seeing FY27 for exports?
One cannot guesstimate and see because you can't predict geopolitics, you can't predict externalities that impact trade. But at the same time, you heard my minister multiple times in media that the aspiration and the target that we have put before ourselves is that we should aspire to reach 1 trillion in goods and services by the end of FY27. That's the aspiration. We'll keep working towards it and we'll see where we land.
Give me this, liberty to ask this final question. There are a lot of course, India is tapping all the major economies and US among one of them, and very, very crucial for India. Everybody, looking forward to that. Just what's the brief update on that, if you're comfortable, sir? Share.
I think I shared with media a few days back also that both sides know completely each other's expectation. And the agreement, the framework deal that we announced in February is ready. But if you are aware, that the IPA tariffs against which the deals was announced, that has been removed by the Supreme Court. And after that, the new tariff structure that is being stitched together is under works. So both sides have got the deal ready at the right time. When both sides are ready and feel it is the right time to sign the deal, I think it will be done.
We all wait for that right time as all of us actually eyeing on India-US deal. Thank you so much for speaking with NDTV Profit. Always pleasure talking to you.
Thank you. Thank you very much. Thank you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Great time to get in Shreyas Develkar. He's head of equity at Axis Mutual Fund. Shreyas, good having you. Thanks for taking the time out. Good morning to you. How are you approaching the investing process currently? Because the Q1 results thus far seem to be okay, but if the bogey of oil had gone away 2 weeks ago, it has certainly come back, even though it's not in the same ferocity, because oil prices are not at 105 but at 85, but still they are no longer at 70 either. Is this a good time, despite the uncertainty, to bet on the names which are giving out results? Or would you sit on a bit of cash waiting for the conflict to be completely out of the way?
Actually, as far as this conflict is concerned, expecting that it will be completely out of the way will be very demanding assumption to make. So we like it or not, we have to make our assumptions around it and move around accordingly. So whether you go ahead with the assumption of crude being 80s to 90s or 100 plus or closer to 70s, obviously that makes a difference in the way you would build a portfolio. We would like to believe that, yes, we should build a portfolio around 80s to 90s assumption on a steady state basis. Any positive news with crude growing closer to 70s, the way it happened, is definitely a positive outcome. As far as the growth is concerned, and you're rightly highlighting that, yes, this quarter, if you notice the previews which are coming out, already the Nifty growth rate for this quarter expectation as per various brokerages is around 17% on top line front. Now, this number actually is one of the highest in last 3 years when it comes to top line growth. However, when it comes to bottom line growth, because of the margin contraction in many sectors, like from in autos, it is there in some of the consumer staples, some of the pharmaceuticals. So because of the margin compression, probably the bottom line growth is not as great. It is hovering around 5 to 8% as per various estimates. But top line growth, again, this is, as I said, it is one of the great news. Because historically, what we have seen, especially when it comes to large cap growth, it has been dependent on the nominal GDP growth. Now, average CPI plus WPI for this quarter is around 7%. Again, it is one of the high number in last 2 to 3 years. So net, as far as numbers are concerned, top line trajectory looks good. Even underlying parameters like the volume growth in auto, the impact is not as high as what everyone feared when the war started in Iran. You take multiple categories, the impact is not as much on the volume, and that's where we see that more stability. Again, if the crude goes above 90, 100, then obviously I would call out that yes, then that is a situation to be considered and which may have a negative impact.
I'm just wondering what you're making of, and of course it's very early days in this earnings cycle, but this conversation that we're having more and more repeatedly about the distinction between the trajectory of the large cap names on the earnings front and the broader markets, where you can see 15, 17, 20% earnings growth in the broader markets, but in the large caps, it's restricted to single digits. Is that something that will continue to pan out in FY27 in your opinion?
If you see the construct of large cap, it's not actually not about the large cap versus mid and small. It is about a construct of large cap. It is if you take around 30-40% of large cap is financial services. Now here in the lending, the credit growth is improving already. Right, it is about 17%. The NIM pressure continues. So even in this quarter, the joker in the pack is the NIM, because as far as the credit quality is concerned, as well as credit growth is concerned, both are actually tracking very well. So if there is a rate hike, which actually supports NIM, especially in case of bank, but once that NIM pressure is behind, then generally even this pack will do good. FMCG is another sector, and IT. These are the two relatively larger sectors. I would call it closer to 15-20% of the index. Here, the growth has not improved. Beyond that, there are sectors like oil and gas, which generally don't tend to grow as much if it's depend only on the commodity prices. All in all, in my opinion, if the financial services, the banking pack, here the growth is delivered and NIM pressure is behind, then probably this may lead to the improvement in the large cap growth rate. Mid and small cap growth rate has been around 15% plus. But if you look at the challenge in the market has been, see, last for 2 years also, the mid and small cap growth has been 15% plus. But when it comes to returns, because of the valuation, the returns has not been that great. They outperform large cap, there is no doubt, but absolute returns has not been commensurate to the earning growth. And that's where when it comes to the large cap versus mid cap, the debate, which I generally don't want to get into, because it's more to do with the construct than anything else. So in case of large cap, in my opinion, if the financial services does well, and the valuations are reasonable compared to their pre-COVID level valuations, there is a good risk reward available here.
How are you looking at some of the private bank majors ahead of the results this Saturday? What would you be watching out for, and will this be a very important quarter from that perspective as well, because it will capture some of the turbulence we've seen in the economy and globally?
So for bank and NBFCs, especially lenders, there are two things. One is about the result and one is about overall macro environment, because that also bears a broader impact on this sector. So as far as growth is concerned, as we all of us know already, the result previews are out, which are given by the companies themselves and the banks themselves and NBFCs themselves. The credit growth numbers are really good across the board. There is no question on that. The commentary on the asset quality has been great. So that is again a good news. As I highlighted, in case of banks, the NIM pressure has been the concern for the market. Actually, for bank, the increase in the interest rate should be a positive as far as the NIM pressure is concerned. But let's not take a call whether it happens or not. So once that is behind, in my opinion, banks are in the good position as far as growth is concerned, and likewise NBFC. So both the lending part. The other aspect which always works as far as the sector performance of lenders is concerned, which is to do with broader market liquidity. Generally, if you would have observed, there is a correlation between rupee depreciation, there is a correlation between the expectation of interest rate, etc. On that front, the coordinated effort of central bank and central government to arrest the impact on the rupee depreciation, to attract foreign flows in that has been a good news. Let's see how much money we get. The estimates has been right from $50 billion plus to as high as $80 billion as well. If we get good money in that and the liquidity is good, as well as the pressure on the rupees also off because of this, then I think even that will be a good news for the banks.
Okay. Shreyas, a lot of chatter around the need to invest in precision manufacturing, and multiple businesses out there, right, which are doing this under various verticals. Where are you present? Where do you find favor in this space? And are valuations still attractive, or now they are uninviting? I mean, you can hold them because you have them. Otherwise, buying afresh might become a problem.
Valuations, yes, yeah, I agree. It is high everywhere. So not only precision manufacturing, if you take entire manufacturing space. So generally, when it comes to discussion around manufacturing, I normally include everything in it. So it is right from auto ancillaries. If you notice, many auto ancillaries, they are now no more pure play India OEM auto ancillaries or India OEM oriented auto ancillaries. They are doing defense, they are doing exports, EMS, and so on. And one of them is precision manufacturing. So there are multiple such segments. In case of capital goods, obviously there are segments right from the bearing to gears to lights and so on. So the entire manufacturing piece we are really positive on. And yes, valuations are high, but most of this piece has presence in mid and small cap segment. I don't think many of them are in the large cap, and that's where again comes to the debate between the large and mid cap. Now, this entire opportunity is there in the mid and small cap space. The growth is good. The kind of orders they got is good. So multiple orders companies got, even for transformer exports, engine exports, and such things we are hearing from multiple companies. And one more important point is rupee depreciation, the way it has happened so far. That also adds to added advantage as far as exports is concerned or import substitution is concerned. So, but generally in case of manufacturing, it takes a lot of time to really play out, because in the services sector, historically, you must have seen that whenever rupee depreciate, people used to buy IT or pharma, because there the translation into business or the positivity is really straightforward and in shorter period of time. In case of manufacturing sector, generally it would take longer period because people will decide, then the capex will happen, then the orders will come, and then you get the benefit. So it is a relatively long gestation process. But in my opinion, as far as markets is concerned, and that's where you're rightly highlighting, that as far as markets is concerned, we are in the mid cycle. We are no more in the up cycle of the manufacturing as a theme. So we have to be very calibrated on what you want to really buy. We have to really assess. The way we are doing is we are assessing what are the optionalities available, because today at high valuation, you actually price in the option value. In a particular company, this company will get into this new area and the potential is so much. So that optionality we have to assess really well, because if you go wrong on that, then these valuations may hurt us.
That's a good point. Absolutely. All right, Shreyas, absolute pleasure as always speaking with you. Thanks so much for taking the time.
Thank you.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Let's get in. Alind Saxena, Executive Director and President, Strategic Initiatives and Growth Markets at L&T Tech, to join in. Welcome to the show, Alinda. Always a pleasure to speak to you. Strong first quarter. The question is this kind of growth sustainable through the rest of FY27?
No, it's a good question. And obviously, you've gone through the results. You have an understanding. See, I would break up that question in three parts. So one is you got to look at, when we look at our organization, we break it into three segments. So that's mobility segment and tech, and which is how I would answer the first part. The second is I will talk a little bit about the things that we are doing differently in these sectors, which are making us happen. And third is we'll talk a little bit about the customer behavior. So if you look at our story for this quarter, we have shown positive growth, 2.3% growth in our mobility sector, and which I think is very encouraging. And then you must understand that when we look at our mobility sector, for us, the diversification strategy helps. So we are not just talking about automotive, which is, of course, the most visible part of what we do, but also trucks on off-highway and aero and rail. And all three of them make tremendous contribution towards mobility as a segment. So we are seeing traction in two of them. And the third one is also that we are seeing traction, maybe not to that greater degree, but it's still a very positive story that we see. So mobility will remain positive, that would grow. If you were to look at the next sector, which is our sustainability sector. So sustainability sector has been a story for, I would say, the last 4, 5, 6 quarters. And we grew year on year, as well as we grew about 4.3% this quarter as well. So that's a continuous sector growth strategy which is there. And you got to look at it at the back of the fact that there is enough demand in the market, especially because of data centers, the modernization of the refineries which is happening, and also the energy consumption which is going up through the roof. So all three of those are creating that demand, which is a good tailwind for us as we are going through, right? So that's on the sustainability side. And then on the tech side, if you were to think about tech as semiconductors and communications, so we are going over there. There is software and platforms where we have seen things move. Part of that because of the acquisition that we did. So things are moving. We had one program which came to a logical end, and a slight delay in picking up the next one, which we're very confident that we should be talking about it very shortly, and there'll be a couple of deals that we will announce shortly in that area. So we remain positive about all the three sectors which go back to the growth story.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
I got to learn a lot because, to just get a point of view as to how different jury members were looking at various participants, and, the rigor that they brought in to the whole process, I thought was astonishing. Not only was there a lot of trust element on who they chose, but also that they had consistently delivered.
US benchmarks closed lower on Friday amid a fresh sell-off in chip makers and renewed geopolitical tensions. The major stock benchmarks notched weekly losses, with the S&P 500 off 1.6%, Nasdaq slid 2.9%, Dow also fell about 0.9%. On the week, crude extends gains, reaching its highest level in a month. And the Wall Street shrugged off global headwinds, with both Nifty and Sensex closing the week with gains as earnings gather pace, sidetracking oil volatility. Broader markets closed mixed, with banking stocks gaining the most. Kotak Mahindra Bank, meanwhile, reports in-line set of first quarter numbers, with net interest income rising almost 9% on a year-on-year basis. Axis Bank, on the other hand, sees flat operating profits as asset quality declines. Punjab National Bank delivers healthy numbers with improved NPAs. Skyroot Aerospace creates history with the launch of its first orbital rocket, Vikram-1. This marks India's first privately developed orbital class rocket to take flight. Good afternoon. You're watching Profit 360 with me, Shreyansi Singh, and this is the show that over the next few minutes is going to get you highlights in terms of everything that is happening in the country as well as across the world. But first things first, let's talk about our top story at this hour. It's AI-powered fraud that is emerging as a new threat for businesses and investors. SEBI and NSE, in fact, have issued fresh warnings over deepfake CEO calls, fake trading apps, and phishing attempts designed to trigger unauthorized fund transfers. Regulators are urging companies and investors alike to strengthen verification processes at the moment as cyber scams also become more sophisticated. Now, before we get you some more insights from our guest as well on the show, let's get in Nimit to set up all of that context right for us. Nimit.
Picture the scenario where it's 6:30 in the evening. You are the head of a listed financial company's finances, and you're about leaving office when your CEO calls. And then a message follows from your CEO. Then there's a video call. There's an important transaction. It's confidential, and it has to happen immediately. You have to send across the money, and you, of course, can't discuss it with anyone else. The payment is made. A few hours later, you discover that the CEO never made that call. Now, that is the scam market regulators are now worried about. In the space of 2 days, the Securities and Exchange Board of India, as well as the NSE, have issued cyber security advisories warning that fraud is entering a new phase. Not because hackers have found better ways to break into computers, but because they're finding better and easier ways to manipulate people using AI. SEBI has flagged what's known as the boss scam, where fraudsters impersonate senior executives using AI-generated voice clones, deepfake videos, emails, messaging apps to pressure employees into transferring money. This attack isn't on a company's systems, it's on the trust that you have with your boss. At the same time, the NSE has warned about fake trading apps, cloned websites, phishing links, and social media accounts designated to look legitimate, all with one objective: getting investors to hand over money or sensitive information. Different victims, different methods, the same modus operandi, using AI to scam you into sending your money. Now, what makes these warnings significant is that for years, cybersecurity was largely about firewalls, passwords, software. Today, it's no longer about that. It's about human manipulation, and AI is making it easy for scamsters to do that. The advice from both regulators is simple: slow down, verify independently, and don't let urgency override common sense. Because in the age of artificial intelligence, the most convincing scam may be the one that sounds exactly like someone you trust.
Absolutely, and thank you so much, Nimit, for joining in with that update as well. In terms of the entire context to this discussion as well, let's also take all of this forward and get you some more insights when it comes to this. In fact, Sriram Subramanian, MD and founder in Governance Research, joining us on the show right now. Thank you so much for taking time out and joining us this afternoon. This is a very interesting one, right? If your boss calls and it's actually a scammer behind the line, it's a deep fake at that. This is actually quite interesting, but given all of that, let's also talk about how significant the rise of AI-enabled fraud really right now is. Are deepfake, do you think, the scams, are they becoming the next major cybersecurity risk then for corporate India?
Good afternoon. Yes, I think so, because at the end of the day, AI brings in newer capabilities to the fraudsters. And as you said, not just video as well as audio can be morphed. So this boss scam, which is morphing some senior executives, this or video can be used to fraud employees of any company. So these fraudsters take care of study the company in detail on LinkedIn, and then subsequently they use the data to and AI to perpetrate the fraud. As it happens, see, this is just another variant of the digital arrest scam. So, of course, the one of the first frauds that was perpetrated was a deepfake, was about $50 million, which a CFO called an employee and got him to transfer in the US. So that was a very telling case. So companies need to be very aware that this kind of boss fraud is being happening.
And off late, we've been hearing about some of these cases as well when it comes to some of the retail investors as well. There's a lot that's been in the news right now. But, when you talk about the speed at all of this is happening right now, do you think that regulators are prepared, sir, for the speed at which AI-driven scams are evolving?
No, I don't think regulators themselves need to be prepared. It's more of the companies which need to take into account, or people, the sensitization of all involved. So obviously the onus on the regulators is to educate companies. The MCA, the RBI, the SEBI and all can of course educate the companies. They can send out emails. They can educate companies through industry forums, etc., about these deep fake videos and the possibility that these bring about. Even banks can also get involved in these, educating the companies and the employees. So that would probably disseminate or ensure that these frauds are mitigated to some extent.
No, absolutely. And not to sound like an alarmist, sir, but when you talk about the current measures that are in place, do you think that above and beyond what you've mentioned, currently the state at which companies are operating in terms of the approval systems, do you think that needs to be getting a little bit of a reset in the era of AI impersonation as well?
No, I don't think. See, eventually it is the education of people. If people can confirm that somebody who is supposed to call or everything, they don't act in haste, there is an education of people, the employees of companies. I think that would mitigate to some extent. Of course, two-factor authentication is one way to mitigate it. Banks have enabled it. I think there is more need for two-factor authentication so that a single approval doesn't transfer funds, etc. So I think that is the next stage. I would think regulators can act, and more banking systems, etc. Because funds transfer is a crux in any of the corporate scams.
No, absolutely. And speaking of some of those scams as well, just hang in there while we play out this bit of commentary also that we had coming in from Sulin Bharti Mittal as well in terms of how an employee of his nearly got scammed as well. Let's go across and listen into that bit of commentary, and then we'll come back for some more insights.
I can give you one personal example. Just not too long ago, one of my senior finance persons in Dubai, which handles our Africa headquarters, got a call in my voice, my tone, directing for a money transfer, a fairly large amount of money. And he was sensible. He immediately realized that I wouldn't call anybody in my company to make that kind of a deal. But when I heard that, voice recording, I was quite stunned. It was perfectly articulated as I would speak. And anybody who would have not been vigilant may have done something about it.
That's incredible.
And so you will have now...
Did you track down where it came from? Was it possible to do that?
I mean, we put our complaints and all to the police and all that, but I'm sure this is now a daily routine. One will have to be vigilant. Tomorrow you will see not just a voice, you will probably see your digital signatures, you'll see your face on our Zoom call. All these things will have to be protected. I mean, we'll have to protect our societies from the evils of AI. And yet we have to use the goodness of AI, because those companies, nations that will not adopt AI will be left behind.
All right, the evils of AI definitely in the spotlight, but let's also talk about what else is in the spotlight, and it's actually PNB management talking in terms of their Q1 results. Let's cut across and listen into that commentary.
30th June 2025. So thereby 100 basis point decrease in the gross NPA performance. And net NPA improvement 0.28% as on 30th June 2026 from the level of 0.38% as on 30th June 2025. This reflects our disciplined credit and recovery framework and keeps us well on track to achieve our financial year 26-27 guidance for both GNPA and net NPA. As of now, we have not seen any material impact of geopolitical tensions on the bank's asset quality. Our slippages remain contained, SMA accounts are stable, and the overall credit portfolio continues to perform well. Our PCR, that is the provision coverage ratio, stands at 97.23% as on 30th June 2026, which is well above our guidance of more than 96% for financial year 27. Total fresh slippages during the Q1 was 2,080 crore as against 1,886 crore in Q1 of last year. Our guidance for our slippages ratio was to remain below 0.9% in financial year 2027, and we are well within our guidance level as slippages ratio for this year is at 0.68% as against 0.71% last year. Total recovery stood at 2,789 crore for Q1 of this year. Our recovery is 1.34x of the slippages in Q1 of this year, reflecting our commitment towards improving asset quality. We have made additional floating provision of 390 crore on prudential basis in Q1 of this year, making our total floating provision at rupees 2,435 crore. There is consistent improvement in the SMA book, and overall SMA stands at 2.9% of the overall loan book. One major highlight I will mention here, that is the asset quality underwriting, how it has happened in the last 6 years. From the 1st July 20 to 30th June 2026, that is the 6 years period, we have sanctioned around 14.74 lakh crore loans, out of which we have disbursed 12.92 lakh crore loans. The outstanding in the loan is 8.94 lakh crore as on today, which is close to 70% of our loan outstanding book. The NPA in this book is hardly 5,486 crore, which is only 0.42% of the disbursed amount under fresh underwriting. So this speaks about the underwriting standard of our bank. Now I will touch upon the capital. Our capital adequacy is 18.13% as on 30th June 2026, compared to 17.5% as on 30th June 2025, against the regulatory requirement of 11.5%. Our CET1 capital stands at 14.52% against a regulatory requirement of 8%. Tier 1 capital stands at 16.03% against a regulatory requirement of 9.5%, and Tier 2 capital stands at 2.10% as on 31st March 20. As on 30th June 2026. More than 86% of the total externally rated advances above 25 crore are above A rated, and more than 52% are AAA rated, which indicates our balance sheet strength from risk point of view. Bank is doing very well in the digital front, and I will highlight some of the performance and what bank is doing about the digital transformation. Digital banking continues to be a strong growth driver for the bank. After crossing the milestone of 1 lakh crore in cumulative digital loan sanctions earlier this year, we are on a track to add another 1 lakh crore during the current financial year. In Q1 alone, Our digital credit sanctions are more than 19,000 crore. This growth is being powered by innovative solutions such as DG Lakpati Didi scheme, Prime Minister Swanidhi scheme, our newly launched emergency credit line, helping us to expand credit access and improve customer convenience. Digital adoption is accelerating rapidly. While every third loan was sanctioned digitally in the last quarter of the previous year, today every second loan is being sanctioned through digital channels. On the transaction side, over 95% of the customer transactions are now digital. We are also actively supporting the RBI and the government initiative on the CBDC and other digital public infrastructure projects, reinforcing our commitment to India's digital transformation journey. Artificial intelligence is emerging as a key growth and transformation driver for the bank. We have already deployed AI-powered solutions across customer service, employee engagement and productivity, learning, and credit processes, delivering tangible business benefits. Going forward, we are scaling AI and GenAI, machine learning across operations, analytics, risk management, and decision-making with a strong focus on responsible AI, governance, and regulatory compliance. We believe AI will be a key differentiator in making our bank more agile, efficient, and customer-centric. PNB is taking early steps towards becoming quantum ready. We have deployed quantum safe encryption in customer-facing applications and developing quantum-based banking use cases such as mule account detection. This reflects our commitment to staying ahead in quantum-safe banking environment and innovation. I will touch upon the human resources part. The bank has partnered with 29 professors of practice and 4 premier institutions, namely ISB Hyderabad, MDI Gurgaon, IPE Hyderabad, and UNext Learning by Manipal Academy, to strengthen capability building through specialized training, research, and future-ready learning. The bank has introduced augmented reality and virtual reality-based training models available in 8 languages to deliver immersive learning and strengthen workforce capability through technology-enabled training. In partnership with Microsoft, the bank has launched an AI training and certification program for all officers to build future-ready digital capabilities. The bank is strengthening its core franchise by expanding its CASA base and accelerating growth in the retail, agriculture, and MSME portfolio, laying the foundation for sustainable growth, stronger margins, and improved operational efficiency. Our disciplined risk management approach, supported by prudent underwriting, controlled slippages, and focused recoveries, continues to strengthen asset quality, while digital and workforce transmission are enhancing productivity and customer experience. Credit cards, cash management services, and supply chain finance continue to emerge as key growth engines, delivering a strong business momentum and supporting diversification of our revenue streams. With a strong balance sheet, disciplined execution, and multiple growth drivers in place, the bank remains well positioned to deliver consistent and sustained value creation. Thank you very much. And myself and my top management team is here to answer any question related with the financial performance of our bank.
Thank you, sir. We'll now begin with the question answer sessions. Anyone who wishes to ask any questions may raise their hand. We'll wait for a queue to line up. And I will request all the participants to have 2 questions, just seeing the timeline. Thank you. Yeah, Mr. Shishir from Hindu Business Line.
Sir, good afternoon. Am I audible?
Yeah, good afternoon, Shishirji. Yeah, you are audible.
Sir, my question is that your profit has gone up by almost 3 times, more than 3 times, if we go by Y on Y. Can you just give us basic reason for this kind of increase in this quarter performance? Number one. And number two, we are finding that the CASA growth has, slightly on a lower side. It is below 40% of your total book. Is it giving some comfort, or is there something which is troubling you? Thank you very much, sir.
Yeah, first of all, the profit part. In fact, if you recall, last year in the very first quarter, we had moved from the old tax regime to the new tax regime. And thereby, around 3,200 crore, we had paid the tax because of the DTA calculation and movement from old tax to new tax regime. And I had also indicated last time that this is a one-time activity that happens if any organization moves from the old tax to new tax regime. And afterwards, if you would have seen the Q2, Q3, and Q4 of last year, every quarter we had a profit of more than 5,000 crore. That is the continuity we have maintained in this quarter also. So the 3,200 crore, if you add in the last year's profit of 1,652 crore, I think we are on the same pace of 5,000 crore of quarterly profit. That is one reason why it looks like a 3 times the profit has gone up. It's because of last year's movement of old tax to new tax regime. Second, your question is related with the CASA. In fact, if you see the CASA growth and seeing the activity which is happening in the entire ecosystem, I think bank has reasonably done well, and especially from the individual growth point of view, there are 3 components in the CASA. One is SB individual, SB institutional, and third is the current account. So bank has done well in the current account. We have shown a growth of 12.3% in the current account deposit. So 9 to 10% growth in the present situation in the CASA or in the segments of the CASA, it treated as a good growth. Saving deposit, individual saving deposit, we have grown more than 9.9%, 9.3% actual growth is there. What we have lost is, and it is across the industry, is the institutional deposit, because all the government deposits which the bank used to keep it in the CNA and SNA account, now it is moving to the just-in-time management, and through RBI, it goes to the bank directly for the payment. But the institutional account, there is a drop of 6.7%. There is a drop in the institutional account. Otherwise, if there would have been a growth in the institutional account, I think our growth would have been more than 11 to 12% in the CASA. So as of now, with this type of performance, we are quite comfortable in maintaining the cost of deposit. And if you see my cost of deposit, that has also gone down in both cost of deposit and cost of fund.
Thank you, sir.
Yeah.
Yeah, I will take next Mr. Dipankar from PTI.
Sir, good afternoon, sir.
Good afternoon.
Sir, congratulations on almost more than 3-fold jump in your net profit. I think this would be the first quarter highest ever profit numbers for you.
Yes. Yes.
Sir, my question is with regard to the NPA part. Your NPA has seen decline. However, if one looks at your balance sheet, the provision has doubled. If you could explain the reason for that. And my second question is with regard to FCNRB deposits. FM had a meeting with you guys earlier this week. What sort of mobilization target you have in your mind, and so far how much collections have been made as far as FCNRB deposits are concerned?
Yeah, first the provision part I will touch. This quarter we have made a NPA provision of 566 crore, and we have kept a floating provision. If you remember, in the every quarter I used to mention about that. Since we have a good net profit, so we thought that we will build up the migration which is going to happen in the ECL. So for that, we have kept a 390 crore provision for the ECL migration. So both put together, it looks like that provision has at an elevated level. But actually, if you see the NPA number, that itself speaks that it was not required that much provision. It is only because of the floating provision which we have made of 390 crore. The provision number has gone up now. Now coming to the FCNR deposit, bank has already mobilized till yesterday 425 million USD. And in fact, various occasions I have already committed that around 2 to 2.5 billion USD we are going to mobilize. And I am standing on that figure. A lot of strategies bank has already adopted. And by end of 30th September, I think we will be reaching around 2.5 billion USD to the FCNR road.
Thank you, sir. Thank you.
Yeah, we'll take next one. Miss Manju from Financial Express.
Can you hear me?
Yeah, good afternoon, madam. Please go ahead.
I just wanted to know, you said that the fresh additions to the NPAs is about 2,080 this quarter. Can you tell me from where this fresh additions are coming from?
Yeah, I will give you the breakup. Retail, it is 402 crore. Agri, 752 crore. And MSME, 825 crore. All put together is 2,080 crore is the total things that has come.
And on the retail side, from where is the stress coming? Retail side?
Retail, see, we have a large portfolio, almost 2 lakh crore plus portfolio is there under the retail segment, constituting the housing loan, vehicle loan, and some other mortgage loans and all. So most of these slippages in the retail segment is towards the housing loan. And we have a security for that. So I think we don't much bothered about that because realization will happen by sale of those properties through the SARFAESI route, or subsequently the customer also comes forward and they will repay that loan.
So out of the 402 crore, how much would be the mortgage delinquencies or the stress from the mortgage side?
No, it is all, see, retail, almost all are through we have the securities. So housing loan is there, mortgage loan is there, the LRD will be there. So it is all having the full security in that retail.
Okay. Why is the stress coming in the mortgage book? Any reason? I mean, I'm not saying that it's alarming. I'm just saying that why is the stress coming there? Is there some due to some job losses? Or?
Nothing. See, sequentially also in every quarter, if you see, retail will be in the range of around 400 to 500 crore. Last year, during the same period, it was 463 crore. Last quarter also, it was in the range of 500 crore. See, when we are doing the banking,